So far, we take a look at what I said yesterday at the close. A quick recap. We have this was the movement that we had. We had the falling wedge with the breakout to the final target there, and essentially that looked like, just to recap here real quick, while the market's still in the phases here. See that right down in that area right there, what I posted. A level I find attractive for a nice accumulation run yesterday at 337. Then went straight to my arrow. Is that not amazing or what? Right out of it. Perfect, like the market was supposed to move like that. This is a move I expect to be a multi-day run, so keeping active management of long trades is a good idea. Maintaining that exposure to the upside, of course, is a good, make it safe by this point to hold overnight. And of course it got to the final after hours without the American public for some reason. 20 minutes after everyone can trade. It just moves smoothly and just seemed to smoothly move all the way throughout the overnight session, all the way up to our B point. And here we are. So it's like on days like today, like if you're following the rules, you still got that trade. And it's not like it was easy to catch. It took nearly all day to get exposure to the reversal on the long term. I look at this as a long term reversal. Now, if you've captured that trade yesterday, the way to make it safe to continue holding is actually to focus on hedging it. You've got a distance between the low and the high. At the end of the day, small trades against that position can really, really, really be a nice cushion builder in the morning here. So far in the morning, we have a little bit of a triangle. The triangle's just about to leave the confines of its step here. Triangle ended with a retest of one side. The other side may get a retest as well. What of the triangle? Relationship with the red zone. Pretty solid, but I would ultimately like to see it get up to that view app. But just allowing for it to make small snap arounds like that is fine. should be out of the range entirely soon. Nice, so we're out of the range altogether. Any trade, okay. So we've just managed to hit a 188 200 on a short term. Like I said, if most people, they didn't have the long running into to today, and they can wake up and start shorting it, and every time they get stopped out, it'll be a squeeze, but it's not going to benefit any long position that they have from the close because they don't have one. So it's like at the end of the day, if you do everything you can to keep that long trade from yesterday and endure all of the pullbacks that it has to give, unless it makes an entirely new low, you're still in. Like, I don't care if it comes all the way down to this gold line, you still have to be in. Because it could be the chop of death on top of this, which could mean you have to take 5 or 6 new risks to get your position back, and it's higher than where you originally have it. And it's just not worth it. So at the end of the day, focusing on hedging against your position can increase the amount of profit that you have in the event that it gets hit, and you also have a position from the extreme in the event that it continues to dump, whereas the individual won't have any of that. None of it. Just completely oblivious. That's what they like though. You can't help but notice the expanding wedge again though. Like the market will go through phases of making different patterns because the public does not respond to them in a positive way for themselves. And it's the institutions' work that make these kind of moves. Like, is it not true that this is a way that we make a spike out of the bottom and a consolidation with a spike out of the top? Evenly proportioned, I'd say as well. Ironically, that is a bearish pattern. It always creates an uptrend. But bearish patterns don't always have to come down. That's another major thing. They're supposed to, but they don't. Especially in environments like this one where I can tell the friends on Wall Street here have a position, they want to move it. But rather than just thinking in one direction, in a term that's good for the existing position, understanding every single flaw that it can have and actually trading against it as it goes can give a lot of extra profit. And if you did hedge it, the perfect point to consider taking profit. Keeping some just in case we make new lows. Never giving up that whole position. When you do, you give up the accountability, give up the exposure, of course. Now, of course, the spike on both sides consolidation. There's no way that you can draw a downtrend on this unless it's this one. The whole thing, uptrend. The whole thing is a channel. And until we break this line, supporting line, yellow one, it is in an uptrend. And you identify a trend in 2023, typically less of it left than there is on this. You think that's your friend? Not going to very backwards in my. The trend is your friend. There would be more of it left than there was existing, no? But my opinion, the next trend is your friend, the one that you can catch the entirety of, not being late to the trend. Cringe in my. Because why is it that your strategy of all the strategies that there are involves you being late to the trend when it doesn't have to? And why would you settle for something so risky? Becomes an interesting question.
Because a lot of people don't have that question asked to them, and it's like, it's huge in my opinion because it makes you better, really. It's like, why do I not get the beginning? You know what I mean? It's like, seriously, you should focus on trying to catch it because it's possible. And if everybody in your life's been telling you that it's impossible to catch the low and catch the high every single day, I mean, that's probably why you don't catch it because you believe them. You don't try. But I'm exactly the opposite. Most of the people told me I couldn't do what I do in my entire life, so I just got to say, okay then, go on. But at the end of the day, today in this week, could be considerably easy following the rules. All you got to do is keep it going, and you could have hundreds of points in your account by the end of the week, or by the end of the move. I don't really care when the end of the week is. If the move ain't stopped by then it's not done. So, and it'll have clear cues as to when it's over. And guess what? When it's over, it doesn't mean giving up the long position. It means hedging it with twice the size of a long position. Because think about it. If you've got one NQ down here, in a hypothetical situation, it went up, 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 up. You've got a lot of money. And if you're thinking about selling it, you can use that money that you've made to develop a position against it. So that when it comes all the way down to here and chops, 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 and then lifts off again, you've still got this position. Because this is a better position than this one. Okay? In every single which way, shape, and form, being in at the lowest point is better than being in from the retracement higher than the lowest point. Doesn't make any sense to want to be in from the higher point, but a lot of people are like, oh my goodness, this point right here, it's such a big risk, I better dump the whole thing and find a better entry somewhere else. The market doesn't give that though. And then you're in from the middle. And then it's hard to manage because it keeps coming to slap you out every single time that that we get some sort of retracement. Because I mean, we're coming out of the land of the 95% retracement. Do you know that that means 95% of the move comes back before it continues? And you want to know what's funny? Is the people that try and catch the 95% pullback have to take a risk, which is more of a risk than the people that at the beginning, at the low. And it's like, what it tells me is the market really wants the people that can decide the market's reversals and then has the integrity to keep them. And it's hard. Um, skills and tools that you've used to become successful, and you continue to use those tools whenever you find another opportunity to also become successful. You take that same kind of attitude towards that idea or that kind of like that mission, and you work those same systems and those same that same kind of like mental process and you systematically lay everything out. However it is that makes you successful, you do those things in other things. It could be something so simple as like playing a game with your kid or something like that. It's very simple. Say it's a very very young kid. And you can even apply those same kind of skills in something so simple. And you'll find yourself doing it after you've done that successful thing. You go back and you look at those things that made you successful, and you go and you repeat those things in other endeavors that you've had in your life as well, or that you have in your life as well. And I was like, oh, that's interesting. You know, and it makes sense. You know, I relate to that. I do like to use those kind of the things that have helped you in the past. You focus in on them, and you know, I guess you could call them they're your strengths. And you hone in on them and make it as clear and easy as possible to use those strengths to the best of your ability. But you know, we're on like a wonky right shoulder right now as well. It's like I'm curious. You know, I'm not like right now. I'm very patient with this kind of environment because they've been screwing people hard, like really badly. Like left shoulder, head, and then right shoulder. I'm like, what is that? You know, that's a terrible um, attempt at trying to do this. Why the angle? You know what I mean? Very strange. At the end of the day, the most common thing to happen out of a head and shoulders pattern is to form an inverse head and shoulders pattern, which is basically the same thing upside down. Except yesterday we were seeing different things. We could see that instead of it making a head and shoulders into an inverse head and shoulders, there was one move that was different. It would go, okay, I'm a head and shoulders so far, and it would make a third drive high. Like, whoa, where the hell did that come from? That's not normal. And then it would go down, and it would make, you know, head and shoulders, and then third drive down. I mean, like, well, anybody that's made this part of their strategy because they've seen it 10 times in the past week is now losing on it. Interesting. I did mention that, you know, everything that we've been doing is subject to changing, and I'm pro the change because I literally, I can't stand the idea that people notice it late and then they want to hop onto it. I'm like, no, 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 no. Market doesn't like that. I'm like, you have to notice it when it first wants to make the change, anticipate the change, and then be part of it as well. You know, but not oh my goodness, the market did this and it's new to me and I'm gonna try and make it, you know, happen again for me. I'm like, no, no, it's brutal. That's just not in a controlling position for me. I'm just like I can't live like that. So it's good to make sure that you maintain that control at all times. Now, you might notice that I put another yellow line in there. It's not another short-term line. Doesn't mean that we're not still in this subtrend here, but it is technically triangulating in between those two lines. You know, one of them's going to have to break when it comes to 10 minutes from now ish, but it breaks maybe sooner. I'm pro sooner. Let's get out of here. You know. And of course, if you had a hedge from the 188-200, or if you hedged it at all whatsoever on the right shoulder, or if you had it hedged it anywhere, you know, just make sure it's safe because that new line is in there now, and we are on like maybe, you know, a crappy third wave, so that's fine, honestly. And I know we've been seeing these extremely expanding wedges. I can't stand them. Honestly, I think they're a huge waste of time. They don't really offer much at all. But you know, they should be over soon, like everything else. Comes to an end. Or else it would be too easy for the public. Now it's funny is the market doesn't make it easy for the public. Not anymore. It used to. Back in the day when nobody looked at the charts, it was making the same pattern all the time. Ironically, you know, we used to see ascending triangles work all the time. You remember that pattern? I bashed it hard yesterday because you know what it did is it got everybody in to a short position that was wrong. I'm like, what? Why? It's just too much because this pattern is supposed to be a bearish continuation pattern, and apparently it happens at the end of downtrends. I'm like, well, how is it a bearish continuation pattern if it happens at the end of downtrends? I'm like, you gotta rewrite that because I looked it up on Google and that's what it said the first thing. I'm like, come on, get out of here with that crap. You know, it should be black and white. It's like this is a pattern. We've made it a pattern because it means this. You know, it should mean two things, and those two things are contrary to each other. And how does that help anybody? But you know, anybody could put anything they want on Google, and it's fine. I think that's despicable, personally. But you know.
So the short-term downtrend line is getting attacked. Absolutely fine. I'm interested in the 61 because I think what we've done is a 61 to the underside. Oh, it's a little bit testing it from the underside, yeah. But past it. And I can't help but notice one thing here. This spike out the top of the range, but never have we ever seen it out the bottom. Now the irony of this channel is it is possible in theory to go sideways long enough to be able to make that spike without going down. I just don't think that's going to happen though, but it is possible. So having that consideration, it means that as time goes on, the spike doesn't actually have to be as big out of the bottom of the range. That means, but the spike out of the bottom of the range is what we're seeing right now. And it's kind of like a fifth wave. 1, 2, 3, 4, and 5. Now, of course, it's just coming off the POC, the area where it's centralized in the middle. And the supporting line becomes a lot less important, good for retesting and such, but now it is a fact that we are in this downtrend, and until it breaks, we are in a downtrend. And of course, we have a new B point up here as well, something to really, take into consideration. We've also moved to the 188-200 yet again. I mean, we saw one of them work in the morning, so I'm a little skeptical with this one. What we might do is actually come back to it from the underside, so beware of that. Again, this is a time in the morning where they're going to try and chop the people out a bit. The open volatility is coming to an end. Also, just in major consideration, we are inside of the range now. The green zone has a relationship with the red zone. And like I said yesterday, I want to see some volume up in that area up there. I just don't want the public to be part of it. And I think somebody else is on the page. Not because I started that though. The institution started that. I'm just on the I'm on the page with that. I can see clearly, how they position the people for their strategies on Google and how they make moves around those people. They wait for them to accumulate at areas that quote unquote worked in the past and then make them fail. Like why would an average person do that to another average person when all of the average people are looking at the same patterns? Why would they make them fail? And why would they make them fail just after they worked? Just like this. But of course they would, because it's a game against them. They don't realize that the individuals have have entities working against them, so and I 100% realize that. That's the theory of the composite man, and I'm 100% behind it. Uh, and what's crazy is nowadays, you can't think of stuff like this and go around saying it because you'd be called crazy. But they didn't even have computers when this guy wrote this. They didn't even have color photographs when this guy wrote this. Uh, Crying out loud, he was old when he got into it. I think. I've never seen a young picture of him. Anyways, all fluctuations in the market and all various stocks should be studied as if they were the result of one man's operations. Let us call him the composite man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. Now, that guy, he was born in 1873. Oh yeah, well, his name was Wyckoff. He didn't even get to see World War II. That's how old he is. So that's hardcore. At the end of the day, every chart that he's ever seen, somebody's either drawn it for him or he's drawn it himself. And they used fractions back in the day, which is like, whoa. I'm glad we don't have to do that anymore. It's unnecessary. Of course, some of these B points, they're from yesterday. I just want to go over this one here. You know, the one that we were looking at yesterday, the 61 was in line with the B point, and the B point was a level that we were literally just using a moment ago. The 188 200. Do you see how that level down there? Using that, and it's subject to change. It will change, and because I know it so well, I'll notice when something's wrong with it. Like right now, I said it was going to go back and test it from the underside. I didn't say it was going to hold. Now you want to know what's funny? Is this one up here held like it was made, showed everyone. This one is the first major reversal of the day, and then it goes around. Roughly has the same size B point and everything. Creates the same size pattern and everything. Let's take a look at this one. And then the B point down here, we're all the way almost at the 261. Testing it from the underside, not yet, but close, we will be. And another thing as well is many people will draw the fib channels in ways like you would draw a trend line, but they're subject to like discretion. They need a certain level of discretion. That's why a computer can't draw it. And I'm like, at the end of the day, uh, I'm confident that with the amount of change that there is, you cannot program ingenuity into a computer. And as soon as the computer starts to falter and you've been on the beach for too long, it's like, who's going to program the computer? Because somebody has to keep understanding the market. And unless you're going to leave it onto the computer, that means they're worth more to the account than you are. I mean, you're the only thing that sucks money out of the account for what? The computer doesn't even need it. It's better in charge of the account than you are. I don't like that. I like to earn my money and spend it because I've earned it. That's the reality. I don't like to luck out. I like to get it because I wanted it, because I went out for it, and because I worked for it, and that's it. Maybe I'm salty because I've never been lucky. But I don't even know what it's like. I've had to work for everything. The 261. I mean, that's the way to do it. 261 is the current level that we're at right now. So I just put a blue line in there. I'm very interested in its uh, role environment. We can see we've just come back to test it from the underside. Yes, another thing I think we're gonna see right now is a inverse head and shoulders. And it does not have to have even shoulder levels. Watch out for that inverse head and shoulders to bring us to the blue line.
Hey John,
Yo yo.
looking on the hourly, wouldn't you consider that a triple bottom?
A triple bottom? Ironically, let's take a look at that. So it's like 3 consecutive lows going down though, isn't it?
Yeah.
Yeah, like the big ones.
No, no, no. Just on the hourly, that big drop that we have last, right
Like
there.
yeah, like it's done 1, 2, and 3 down here. So that's like a 3 drives, yeah. So it's like the same thing as this though, as well, big one. Basically. Now the thing that I like about it is it's never ever tried to test this level. And basically being in from the wicks and spikes on the daily low from yesterday is, or the hourly low, we can see that everybody's coming back down to test those wicks and spikes right now. And the volume profile really gets thin on those wicks and spikes. That's where that white dashed line is right there. And if I go back on the 1 minute, that was the white dashed line that I said everything had to be bought back up to um, at the end of the day. And that was a far distance off of this falling wedge. You know, that's where my accumulation run was too. And that was basically like how they formed the wick on the hourly. So it's not like up into this, but you have to think about it from two sides because the institutions can't give up their long trades as easily as an individual can. They have to find buyers. If you want to liquidate a position, you might lose something like 30%, or maybe not 30, something like 20. And because as soon as you start flooding the market, it's going to start coming down. Basically, what it's doing is it's coming back to fill the pre-market gap on QQQ. QQQ might have a gap here because I remember the end of the day, it ended at that arrow that I drew, and then it ran up to the final mark. And you can see this movement on QQQ very clear, and then it goes kind of off into its own. And I'm impressed with the return back to the POC there. Ironically, we've been seeing a lot of this, where we've got 1, 2, and 3 lows, 1, 2, and 3 highs, and starting to see that in here. But look at how far the 188 is away. And is it not intriguing that that 188 just so happens to be the baseline of this spike? And I think we've seen this somewhere else. It's the same distance out of the top of the range that we used out of the bottom, but sometimes it doesn't go like this. Like a human being will say, okay, there's a range here, and you would put the extremes on the outer side of both range. But instead, the way that it works a lot of the time is for it not to be on the extreme like this, on the high of the red zone and the bottom of the green, but for it to be outside in or inside out. But not like this, even on both sides. I'm curious about that. Obviously, if you're still in from yesterday, you don't have to do it. It means the risk is averted. If you've already taken off enough profit, then peg yourself. If you've hedged it, then you're not going to be knocked out of a position if it decides to go down to the low. I did mention if it comes all the way back down to this yellow line, you want to have a position so you can take profit there. But if you don't have one, then it's fine. It's still going to be closed with a profit, but lots left on the table. At the end of the day, immediately, a position of even farther value will be on the mind. So accumulating for even more on the table. Because it's weird, you know, an individual, if you're like, hey, bro, that's in here right now, you know, I wanna make the market move and give you a better position here. You know, but so you take it like you know, if and I'm gonna tell you that you can do that, and then I have like a situation. Then you know, people don't like that though, because they're like, all right, well, they don't want to be able to get a better position at a lower point. And it's like institutions do. However, they're like, we can get more liquidity at the bottom, or you can, they know where it's going to end up. They'll get everything they can. And using this morning as a very intriguing method of deploying out of the volatility at the open. Now, remember when I was like, hey, you know, this spike out of the bottom, out of consolidation and a spike on the top, it's a bearish pattern. You know, it goes for the break of the yellow line. It did. You know, it doubled that entire range down. More. But at the end of the day, now we're left with a consolidation that has a spike out of the top and a big move down. Remember what I said about that yesterday? The biggest move on the screen is the one that all the individuals and everybody looks at and they're like, oh, it's a bearish day. You know that this is a bullish pattern? The biggest move in it is a downwards move, just like I was explaining yesterday, where falling wedges go down. M's the biggest part of that move that you're taking up. The downwards move. Remember, the falling wedge, it's falling. Every component about this bullish pattern is down, you know? Yet, when people see down, they think that it's bearish somehow. Sense. Okay, hourly momentum. Let's take a look. So hourly momentum. Let's take a look at the base. So I can see that it's very similar to what the price is doing. There's not much of a divergence really. I can see that the price essentially has come down into a new low, and then kind of made this movement. And I can see that it's come down into a new low and kind of made that movement. And come down into a new low, and then kind of made that sort of movement as well on the whole. You know, it could be a very similar situation to this. And the momentum on the hourly is very centralized. I can't help but notice that too. Like it's not at an extreme. It's nowhere near the extreme. Well, I guess it's trying, but not really. It's not easily changed, I would say, from the middle. And I love the idea of returning back to this 261 right here. It's like, look at this giant B point right up here as well. Can't change them. I'm just gonna make them harmonic.
We still have a big point to be touched at towards the bottom though.
Let's take a look.
And that would be on the daily, but like in order for you to be able to see it would be on the daily.
Okay. Like this B point here. So when I was looking at this one, that's basically the red zone and green zone. These B points, that's pretty huge.
Putting piece on that B point, we started dropping at the 161 actually.
Yeah, yeah. I have reason to believe that this entire trend break could be a fake break though. Like it, I know it lifted. One thing that we can see here for sure is that it lifted on a W, right? and it could fall on an M. It's a very controversial point, I'd say. But the time is not to short it from here. The time was to short it from the 2-1 right up here. And I'm like, I'm just indifferent about any movement that we have to the downside here being wicks and spikes. Ultimately, the trend that I think is going to provide the most value, this one across the highs here. Because it's the new red-yellow line on this chart. Because the red-yellow line that we have right now is breaking from that very, very, very low. Of course, I've used this as a long-term chart for quite some time. And I have an entire video on this day, by the way, to go over how I was saying to hold that for 5,000 points. Sorry. This line up here, though, is a huge level. One that we've just broken. I'm gonna like turn it down a little bit. Broken it. Let me. You can see we're at the B point right now. We've just hit the blue line. So anybody that accumulated is now profitable for that move. I'll show you exactly what I posted about it. Hey, nice, man. Saw your trade in there. Talking about. But hey, they didn't really do my inverse head and shoulders, but on the short term they did. Very, very, very short term. Low with a lower low and a higher low lifted off. You can look very closely on the 15-second. You can see it on there too. So the same distance back to the 188 as we spiked out of the top of the range. You know, this is something that's contrary to popular belief. It's so particular. And for it to be set up right around a range that, I mean, this range was not created today or yesterday or this week or last week. You know, they come from, yeah, they were last week. No, no, no. That's actually, they must be from the 12th. If I go to 49 minutes, just to look, it's going to show me these ranges. Yep, yep. They come all the way back from here. See those ranges in there? All the way back from June. And this range here, we were, you know what's funny is they don't look like they were used very well at all, but they are considered now in the future. Because the average individual would have taken them off because they don't think they're important. That's the funny part about it. Because it's not working. And then I'm like, well, now it's working. Working as much as I needed to, at least. You know, at the end of the day, the barriers that are represented by these red zone and green zones. It's not like we stay back and forth between them, but as soon as we run into them, look at how much, like, it's like, okay, we run, and it's like, we bursted, boom, 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 all cylinders. What do we run into? The green zone, right? The fact. And then what do we do to get through that green zone? Did it not take a siege node? You know, I basically tell you that how do we make it through a green zone? You know, we make it through green zones by putting everything, we throw everything we've got at it. We put it under siege, and then it creates this huge node, and I call it a siege node. You know, and then we work our way into it. We conquer that node by stepping on top of it and showing them who's boss. Then we go to the other side of the range, and then show everyone that, hey, that's actually a resistance level. We break through that. We step on that, conquered it, and then what do we do if not move to the B point, the 61%? Which was exactly the target yesterday, right here. And somebody else had our target too. And, you know, we can see today we worked on that green zone a little bit more. How do we make it through a green zone? They have to be quick and smashy all the time. We could be in for that soon. Next time we get to that green zone, what could we be in for? The siege of a lifetime. That's after hours movement, so everything takes longer. So don't worry about that. It might not take that long. I hope it doesn't take that long. Because it sucks when it takes that long, I tell you. But at the end of the day, it doesn't matter if you're in and you can hold through it. As long as the capitulation, or sorry, the sideways consolidation doesn't cause you to capitulate, then you're fine. Because I have a saying, consolidation invites capitulation. And capitulation is when people can't take anything anymore, when they fold on their position. They're like, oh, it's moving hard against me. I can't take this anymore. I'm out. That person's capitulated. Or it's like you could see them saying, "Oh, it's going sideways for too long. I gotta get out of here." You know, that's capitulation too. So many excuses, and I think it's like I don't know. I'm weird. Like when I see an excuse, like I get like it's weird. I'm kind of like I put a block up in my chest. I'm like offended by it almost, and I'm like I can't have that. You know, it's like, definitely not. You know, if there's some sort of kind of excuse to make you not want to do it, or some kind of like thing that you're not interested in because you don't think you're specialized at it or something, I look at that as a weakness. You know, I'm like, oh, I'll never be the one to say, oh, I just look at long-term trades. Don't tell me to look at short-term trades. I'm like, how do you think every long-term trade begins? If you're not interested in the short-term range, how do you get exposure safely to long-term move? You know, sometimes it's a battle on the short term to capture that long-term position. Market just can't shake you. You have to keep persisting and persisting with a move you know is right to be in. Let's look, yesterday for crying out loud. Didn't reverse until the very end, but that was the right reversal to be in, and it was the right thing to allow it to pull back today. If you hedged it, you made money on the pullback. If you didn't, then you didn't have to catch the low. No risk was taken. If you caught the inverse head and shoulders on the low, which there is an inverse head and shoulders, you can look on the low. It went down low, up, down, up, down, up. I mean, I, I from a technical standpoint, that is proof that it did go into a low with a lower low and a higher low. The shoulders were at the same level. There was no other pattern that it could have been doing other than the 188 200 from the oh, it wasn't even a 188 200. So it's like, okay, everybody had to understand that it wasn't going to be even outside of a range that it doesn't even look like it's using. It doesn't even look like it's using the range because it's not using it properly. Most people they would be like, oh, we'll wait and see with that. They can't find that conviction, that absolute, I know it's going to be doing this. But I think like that, and it's like it doesn't let me down. And it's also the interesting part about it is the return back to that blue line. This is a falling wedge, and this falling wedge is supposed to be a bullish pattern. Remember what I was saying in the morning about bearish patterns? They don't always have to work. Bullish patterns don't always have to work either. Because look at the reversal. How cheeky is it to pull that pattern out of nowhere? They're like, oh yeah, this one, right? Remember, you can have it right now. And what do they do to them? Poor, poor, poor people. Take this pattern over here, and I'll show you exactly what they showed us in the morning today. It's absolutely despicable, in my opinion. Somebody created this to take money off of people. How similar is that to what we did there? Why the hell didn't it go up? Because it's like even got kind of the same support. So like subconsciously, you might not even know it, but they're using the same trend lines. I know this the downtrend's not the same, but damn, is that ever similar? And look at the direct, exact opposite response. And then it just throws it in their faces with, oh, yeah, we just came back to the level that you lost money on. Now, how do you think that feels? Terrible to some people. It's like, geez. And I'm like, I don't have to go through this in order. Like, I guess you could say I'm empathic. I can, like I've seen a lot of things, I guess you could say, and I understand how people feel and how people are and what position they could possibly be in, and because I've probably been there before. It's not like I've ever I've definitely bought a falling wedge before, and it's done that, and fallen through the bottom, and it's been a loss. You know, other ones I've been able to recumulate, but
man, is it ever something that wild to see where now, it's not about just the pattern. You can't just say that when you type in rising wedge into Google, it shows you just the pattern. And it insinuates that just finding that pattern is good enough to play it. It's not the case. And with the head and shoulders, it's the same thing. It's very much the same thing. And I can prove it as well. I mean, I do it every day, actually. It's just a matter of time before I prove it again, honestly. I love proving it. I prove it every single time I can because I want it to be obvious that it's not something that's an anomaly. It's something that we can actually find on a regular basis and understand and take part in. When you understand it so well, it's like, oh, here we go again, another failure. I don't know how the public just isn't learning, right? Sometimes you can see it sets them up just to knock them down. One thing that we like to do is herd everyone together at that red line, at that big kind of node there, and it's it's not a good place to trade. I call them the people of the node. And it's a good place to take profit, but not a good place to enter, I'd say. And it's not always good to be trading back to it either. You'd be like, oh, well, are we always returning to the POC? No, there's some days where we don't return to nothing. And if your idea is on that we have to return all the time, you're going to lose on those days, ladies and gentlemen. We have to beware about the days that don't come back. And you want to know what's funny? They come after the days that do. Every time. Goes from one to the other. Just like low volatilities always bring high volatilities. Or high volatility. And every time we get low, it comes to high. Or else we would still be in the last low liquidity, low volatility environment, and that last trend line that never broke because we're still in it. But everything changes. Like everything on a daily basis. The one thing that doesn't change maybe is the yearly chart. But what good is that doing for anybody that's not a part of it already for years and years and years? Like I said, if you didn't come up buying stocks, then it's not doing any good for you, unless you've been exposed to it since your birth, pretty much. Which is, I mean, some people are, but I'm like, that's not a good thing. I mean, it's an easy pass. But what I find interesting here now is we're making a head and shoulders on top of the inverse. So why did I want to make an inverse to begin with? Well, we how many times did we go from head and shoulders to inverse head and shoulders? Is this a similar pattern to what we saw here? Now, I'm just saying it's formed. It doesn't actually have to work. It can fail miserably and go up. But is it not true that it's making something very similar? That's the point. Now, in this case, we've got a head and shoulders here, and it started to move. Effectively, it went down off of it, and effectively, the inverse head and shoulders sent it up. Now, why would a pattern like that fail now? Why would we want it to fail? All of a sudden, it's been so good. Just like the 188 at the beginning of the day, it worked. It showed everyone, hey, look at this pattern. It worked. And now we traded back towards it because we knew it wasn't going to work. We knew this wasn't going to work. I just said it was going to form, not going to play out. And that's key information because just knowing the pattern is not good enough. And that's basically what I have to say there in the clearest way I possibly can. Because it's no good if you don't remember it. So sometimes I say things that are quite profound and controversial in the name of you being able to remember them, because there's a lot of information. I should use, it's tough. I'm not good enough to use humor, so it's like I try when I can, but I'm very serious about it too. So it's hard for me to find a humorous way to talk about it. So severity is it's quite, I look at it like critical situations and so on. It's a very very critical thing for the people that took this right shoulder and got blown out like that. That's not very nice, is it? So we don't want that to happen, and it's very severe, But almost every single thing that worked today, I can find it failing somewhere else. And it's like, will you pick the time that it fails or that it works? What's the difference? And it's like, how well do you know the environment? Because it's not about just the pattern anymore. It's about what's connected to it. Do we understand everything around the pattern? Do we understand where the pattern is? What is the pattern and where is it? And what's around it? It's like, what's the problem? Give me all the variables here. You know what I mean? And that's you know, if you fix a lot of problems in life, like if you're a family man or something like that, you might be fixing problems every day or something, you know? And I think that 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 can help, you know, dealing with things clearly, you know, because you know the first step is not to panic because everyone else is usually panicking around you. You have to be the person to understand the clarity in the situation so you can resolve it for everyone. And in trading, you have to do the same kind of steps to figure out the solution to many of the problems, I guess you could say, the market can throw at you. Now it's doing this again, right? It's like, okay, imagine, remember all the people that shorted the right shoulder, right? Right? Where did they get in from? Let's say they got in from right here, you know, the left shoulder level, because you know it's supposed to come down from both sides equally. So what is it doing to them? It's doing what it did to the people of the falling wedge. It's taunting them. It's like, hey, you know, I know you took this position here, right here, and we blew through it and stole your money. But look at your average price again. And it's like, if you're still in, you can get your money back, but that's it. And it holds here, grinds them, makes them weak. It's tough. It's tough on the mind of the people of this position. And this is something that I recognize is happening to people by the intention of other human beings. And it makes me be able to withstand it that much more. Not that I'm in from that right shoulder, but the environment is a consolidation to many people. But in my opinion, it's a whole experience for the people of that right shoulder. Because I tell you, somebody took it, and it's I could tell you. You want to know what I think is majorly wrong with it? Is that you become a person of the node. I was talking about that. If you forget about that, the people of the node haven't been treated very well. They never get the best price, and it doesn't move very well for them at all. You know, there are patterns that happen in this area. They get eaten up and chewed out. Now, eventually, the herd of people that can't communicate to each other can maybe they'll catch on, and maybe they'll look into something else. But they're so busy with their strategy, so it's very unlikely that they'll notice anything new when they're trying to find the same thing over and over again, expecting the same result. Yet the market continuously gives the same thing over and over again, giving different results, and they have to learn that the hard way. That's tragic, really. And I'm like, it's true. You want to make sure we're we're on the same page as the market. Like I said, the composite demand theory, if you're not in line with the way that the market moves, then you're against it, right? The market's always moving the right way at every given moment of the day. Either us, it's always us that doesn't understand it for what it's trying to say. But there's no wrong move the market will make. It's only us that position ourselves wrongly in the market. That is my saying, quote of the day. So it's about having a good relationship with the market then, you know? Having a good relationship with the movements that it makes and how you can position yourself amongst them. That's pretty much the name of the game. People of the node, they just got a range move. So we went from the high of the node to the low of the node. Does it not look like that expanding triangle that we had in the morning? It's giving me deja vu, not gonna lie, because is it not 3 highs into 3 lows? I know this one did 4 highs into 4 lows, and we saw 4 highs into 4 lows yesterday too. Um, 4 highs into 4 lows. I don't know if it was in here. I can even see throughout the overnight session that they had expanding wedges that had specific movements out of both sides. I find that move right here very suspiciously particular that we had down here. We may see that again in the future good to have an understanding of how it moved overnight. It's quick and easy to just get a clear. But here's the third low. We got to talk about the VWAP again there. Basically, that's a level. The first of the three lows is also the V point in there. The green line puts a lot of stress on this new yellow one that I'm going to put across all of the highs here. So we're coming already back to that green dash line and the VWAP. So, you know, a short, and it's also the green zone. I mean, I can just keep listing things here if I need to. But at the end of the day, anyways, it hit that level, and that level is all it wanted to give at this point, but it's going to give it again. Of course, at levels like that are so close by like that, they're short-term, small, little levels that can get hit and offer a small profit for those that can take trades that small. At the end of the day, it's likely that we'll see that level again, perhaps from another spike. And I mean, like, how close are we to the 61 here? You know, first of all, what did we do up here? Did we do a 61 here? Because it looks like it. Makes a 61? Yeah, it did. Okay, so that level that we saw right here, it went all the way back up, right, to that level. That was a 61. That's fine. The 61 is a golden ratio. Same level that we see in the nature. 61. Tornadoes and stuff, flowers. Everybody's seen a show. So that's another thing I find here is a very strange pattern. Very strange pattern. So the head and shoulders to inverse head and shoulders have been part of the day, right? And now we have a little bit of an inverse head and shoulders here. But let's look at this pattern. Okay, I've just traced over how it is there. Is it not true that it has a high with a higher high and a lower high, and a low with a lower low and a higher low? Is it not true if I was to drag this pattern through the high and show it to you from here? You could say, you know, it's making the inverse head and shoulders really clearly. And if I was to drag it down here, I'm like, oh yeah, you know, you'd see the beginning works of a head and shoulders with a higher high and a lower high. I call it an all-in-one as well. Like it is like what we see with this, because you know people will be like, all right, this is an M, but it ended up as a W, and we can see that quite a lot, especially when it looks like this. It's like going, oh, everybody sees the M, and then it turns into a W. I'm like, that move right there ends up coming out of here, and it's confined within an area, both sides. So again, I'm going to mark this point again for the second time, and put some fibs on there too, just to give us some barriers, some levels of understanding. We can see the 188-200. You know, that's a level that we were using early on in the day. You can see that the first move of the day was right off of that same level, 188-200, right in there. But then we saw it fail, so you have to understand it doesn't always work. But have we shaken off the necessary amount of people to make it work? I think that we're interested in the yellow line ultimately, the one at the top, the thickest one.
This is the 61 here as well.
Yeah, the 61. So we've done a 61 to a 61. Because if you put it on the big move, the last move up here, that was a 61 also. And I didn't even measure that one, but that was the whole idea of measuring this one first, because I thought it was going to be a 61 too. And it made me think about that 61. So I'm like, you know what? At the end of the day, it's a giant triangle right now. Because when you get a 61, to another 61, very easy to get that same triangulation. And that can happen on a head and shoulders. Holy crap, that's very interesting, actually. The idea that we make a head and shoulders to an inverse head and shoulders, and we're doing that now. And I'll just quickly make these green so you can see the inverse, and then you can see these red on the top for the head and shoulders. And I'll make that like purple like that. Take a picture. As rudimentary as the analysis is, I'm not trying to show anything super amazing right now, super complicated. It's basically wave analysis. Except everybody only sees what they want to see, not what it's actually showing. And if they only see Elliott wave, or if they only see Wyckoff, I mean, it may not be doing either of them. Like, what is a cap wave? Like it's not associated with either one of them. Can it do it? Of course. And it's also a 5-wave move. But nobody would look at it like that. But it does have 1, 2, 3, 4, and 5. You can use the same tool, draw something completely different, which everybody understands. Wow. Think. So here we are again, crushing the green dash level. We're moving through the to the other side of the range there. Beautiful. But I had another go at today. It'd be a waste of time for me to change my analysis. I wouldn't change a thing. It'll all be exactly as it is. You know what's so freaking weird is we made another 61. This is the third time. I'm pretty sure that's the 61. What's up with that? 61 right there. Look at that. On the nose. The mental measuring tape, I call it. I still draw it in anyways. I like to prove myself right. That's the idea. One of the things that I find is good to feel good about, just to strive for all the time. It's not the profit and loss that you should be feeling good about, it's the fact that you're doing it right. You're exposed along the lines of the people that make the most, to move the market, to have the most impact, and have the most money. And none of my information comes from what I've heard from anybody else in this entire world. Beautiful. It's all about experience. Hey, I tell you one thing, we just did more than a 61 in that last move. The chain broken. The way that we should look at this, like a triangle, and it getting everybody caught in the tip. That's pretty normal in this environment. Another yellow line. This yellow line, it's not as you would usually have it. Like it's associated with triangles, so it's very risky to be just like assuming that it's gonna work quickly or gonna be involved quickly. It's not something that I'm going home about at all.
As butchered as it is, there are 3 consecutive lows. However, the first of the 3 has been tested and they're disproportionate. Now, one of the major things that we like to see on these triangles is that we return back to them, and I like to make the tip at the very least here. So here we are testing that same level again that we were at yesterday. There's a new B point as well. All these other gold dash lines, they can really be turned down a bit. They're all recent. Another blue line is here. And I like this one because it insinuates that the move that we're going to have after this channel to break this major downtrend, I can put that as a basically the yellow line after the one that we have there. And like testing this low here from the underside is pretty normal as well. Typically a B point of interest in the short term. Yeah, with the larger moves that are like that, typically the grind at the low is not as exactly as attractive as when we make a secondary low. I think
Second leg, the same size as the first one.
yeah, it's almost there, not quite yet, right?
Right.
Yeah, yeah. To really gauge that, like in a technical mathematical way here, the same exact distance would be to that 100. Because that would be 100% of the first move. Doubling again. And that's just fib extensions. They could become really useful in understanding, like, sometimes maybe we don't get all the way double, and maybe we're doing like a 141, maybe we're doing like a 161. And that becomes an interesting kind of idea, because right now we're at a 78% extension, which is kind of strange. Maybe that's relevant. Because what it's saying is that, it's like a really good indicator, or a drawing tool, I guess you could say, to draw on these kind of patterns. And basically, A, B, C, D patterns, they're not always the same distance, but AB can equal CD sometimes. And that is AB equals CD, that pattern. When it goes from the A to the B, same distance that we had from the C to the D. Now, of course, that's just one of them. There's 3 different kinds, and you can actually apply fibs to the B and the C and find that it can actually go beyond that point to get to other levels, and extensions even in some cases apply to them.
Yeah, we always seem to be associated with this kind of movement for this part of the day lately. I mean, I can't help but notice that, by like 10:45, we've come back to hit the majority B point that was created in the morning. And I mean, here we go again. That same kind of movement. And it's created that large range that we saw yesterday. I can't help but notice that, typically around this time of day, this is the time of day, 10:57, 11 o'clock, right? Like 11 o'clock here. What happened at that time? The average size of the candlestick, basically, is what we're looking at here. Right now, we're looking at roughly 10 points a candle on average, based off the past 14 candles on whatever time frame you're looking at any given time. And every day, we can see that, there's a spike in the morning. And that spike in the morning at 9:30, rallies up like crazy. Sometimes that happens a little bit before. Then it always has this like peel off, right? By like 12 o'clock, 1 o'clock, we're in the dumps on that indicator. And 12 o'clock, 1 o'clock again, it started to, and this time it was 11:30. That was a report day. Obviously, it looks different. So that's the kind of volatility we can get on a report. And kind of in 11:50 we started to slow down there. 11:59 here. It's very, very clear that roughly around this time of day, it can be appropriate to have a consolidation. Doesn't mean it's always going to consolidate, but the ATR takes a hit when we consolidate. And that big kind of like choppy area at the high starts to take a hit when we consolidate. Like, let's look at that time there. So at that time, it was 9:49. It started to kind of topple around 10:15. By 11:30, completely a different ATR, halved. By 11:30, by this point, the average candle size was literally cut in half in comparison to what it was in the morning. And this kind of decline that we had there really started to trigger that that downfall in the average size of the candle. Now, it does increase at the end of the day. You can see that there is some sort of increase regularly towards the end of the day. Sometimes it can be more than others, right? Sometimes not so much. So, and it doesn't mean that, we want to assume that it's going to be like any other day, but when we see that the market has had relatively high volatility, and then it reaches a point of an extreme where, we have reason to believe that it could start to go sideways or start to chop or start to slow down on the ATR, then, you might start to think, okay, there's a little bit more added risk with each move because it might not actually go as far, it might take longer, it might be more choppy. So you might have to be like a little bit more lenient with your stops. You might have to, honestly, position sizing should be reduced. Basically steps should be taken in order to reduce the risks of the situation. At the end of the day, there's plenty of space to get back to the yellow and purple line. And the only reason why it's purple is because it's associated with its symmetrical triangle. Symmetrical triangle has never been tested. Now, the interesting part about the move we're currently doing to the upside, it's getting the B point on the very, very short term, right? But is it not the same size as the move that we did counter trend before? Like, let's talk about this move counter trend. Let me take off some of this crap here. And let's look at the trend. 1, 2, 1, 2, 3, 4. We have that right now. Doesn't mean it has to make a fifth, but we have 4 waves. We've done this as a measure of moving back to the B point. So you can see that in this case, we move back to that B point that was marked in, like this. In this pattern, in this chart that we were looking at before, right? Those B points were marked. That was the 188, right? It returned back up to that B point, right? And then in this case, we can see that we use the exact same motion to return back to this B point. So that B point can now be removed. And we're left with one B point. Now, it just so happens to be that this is the move that we've done twice against our downtrend. It's a fact that we've been contained within that yellow line. Every bit of movement that we've ever done is within that yellow line. Now, it doesn't actually have to make a fifth wave in this case, ironically, because people will be almost expecting it to. So I'm curious about it changing. I'm pro change in this case. The blue line is reeking of a need to test over the wave playing out. That's the blue line above. Blue line below, it's longer term. That could be referred to as dark blue. It'll throw people off when they start to, because obviously the best point for it to reverse for the average person would be from here. But if it doesn't give them that, then they might not be able to catch it, and we don't want them in. So, surprised if it didn't give it. You want to know what I would think would be really weird is if they did this. So the fourth wave was a head and shoulders. It could fail upwards. That would be cheeky. Like everybody knows that it's supposed to be a fourth wave, and yet everybody thinks that the head and shoulder would take it down into the fifth. And it's like, who the hell's playing the fifth wave? Like, you think that in this reversal pattern, right, that's meant to send it up, like, that it's smart to play this part down? No, 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 no. I don't know what trade. There's always the next one. You don't have to take that one ever. Never. You just don't have to. And, it's always up to you if you want to make a decision, right? So, you don't have to settle for less. And I think it's important to be picky because, being picky, you might not know it, but you're being patient at the same time. And you can look at it as being picky if you want, and that's fine. However, you want to mentally condition yourself to be able to do the right thing. It doesn't bother me if you tell yourself it's aliens telling you to do it, but if you follow the rules because of it, and you're better at doing it because you tell yourself a certain thing, well, many people do that with faith in religion. So it's like it's the same kind of idea, but having faith in yourself, having faith in your ability, and using the fact that everybody tells you you can't catch a falling wedge, you can't maintain consistency. You don't have to have them tell it to you every single day, but they can tell it to you, and that can motivate you. Motivated me, and it's like it still does to a certain extent. But let's see what we do here with this one. Very curious about this. Not something that I'm interested in jumping in all over, that's for sure. But an area that I suggested could be a slow one and could be an area where we trap people, we create a node. This monstrosity could form. It's a cheeky move, and if they did that, I mean, it's like these institutions, they've already got enough money. It's like shame on them for taking the individual's money like that. I mean, I know it's in the name of capitalism, but gosh, not it's not it's not good for the economy. I think at this scale that they're doing it, and the economy is going to feel it soon. I think. Because it doesn't look like they're actually doing anything good with the money. They just own things. And yeah, I guess those things, they just keep buying more things and keep, like creating more ownership and putting themselves at the top of everything. I'm like, yeah, I see that.
Basically all that hardware.
All that farmland? That's very big. Never heard of it.
He was farming
Oh, okay.
English.
Okay, okay.
Since he was done with like Microsoft, but
Uh-huh.
basically, I'm pretty sure he's the sole provider to all McDonald's fries.
Oh my God, really? It's
And
not really philanthropic, man. Come on.
I'm pretty sure he only grows genetically modified potatoes. So
Well, of course, that's all you can get nowadays, isn't it? It's fine.
who's growing
But
modified food and selling it.
it's ironic because like we over the years, like you can look at what like a watermelon originally looked like, man, and it doesn't look appetizing, and they're like smaller, and like we've made them, they're full of seeds and crap, and it's like,
See it right now. Go to Europe.
oh, what?
Germany in May.
The watermelons are different?
Well, all their fruit, like strawberries, they're bigger, they're more red, and
What, they kept Monsanto's off their land or what? Because that's
size.
that's the company that's the problem.
But like when I bite into a strawberry here, no matter where I get it from, it's really big, it's really juicy, but it doesn't really taste like a strawberry.
Yeah, it's got like no flavor. Yeah, I've seen that, man. It's like the strawberries here, man. They've got no freaking flavor to them. It's weird.
This tastes like strawberries again.
Yeah. Like there are some strawberry fields around here that you can go and like pay, and then they give you a bucket and you go pick them. It's like something you do with the kids or something like that. But
Well, I was talking to a wine
they taste good.
over there who had like acres of fields with like vineyards and shit, and he was saying that European Union, especially Germany, there's only a few pesticides that they're allowed to use, like maybe 4, I think. And he says in the United States, all farms are allowed to use over 20 different pesticides.
Yeah, it's crazy. Should be legal.
8 pesticides, 20 herbicides. So yeah, pretty crazy.
That's the B point.
Hey, John.
Yo,
So changing subject. Sorry.
no worries.
I'm thinking on one of the things that I'm still struggling a lot is the psychological part of the trading. For example, yesterday I trade looking for a long most of the day, and it went down. I ended up on the green.
Yep.
But the fact that I was being stopped or saved so many times, it messed up with the psychological part of me. Today, I'm scared to jump on trades on either direction because of it. What I see is, we're pretty much low on a certain point, but yet we still have room to go lower. So how can I deal with that kind of situation?
Okay, it's true. It's true. At the end of the day, what you're struggling with is it's like you're being forced to trade in the middle. Like there's not enough time for us to leave the middle. It's because it's a long-term range, and it is that case that we are in the middle, and that it is a risk. It's an inherent risk, and I know that every day that we're contained within that middle area, it continues to be a risk. That's the irony of it. And it's good that you feel that way about it, because if you didn't, you would be disregarding the risk. And it's a mental blocker saying, bro, you're actually trading in the middle on the hourly, and this is why it's going so tough for you. That's what I think is going on, personally. Like I think that the middle on the hourly, it's chopping the crap out of everybody, right? And I think that that's huge right now. And nobody's really getting the long-term runs, because they're not really forming throughout the day. Essentially, they're happening at the end of the day. The majority of the major moves, at least last week, I remember saying at least 6 moves, and I'm like, oh man. But yeah, that's what I was thinking. Like you're saying that it's a mental issue because it keeps happening, but there is an issue because you said it yourself. Like you're looking at the long term. It has room to go up and room to go down. That sounds exactly like a middle to me. And that's it. That's like a big mental issue for me. Like on the if you were trading on the hourly and you got it to move like the 1 minute, like it wouldn't necessarily well, the hourly is a bit low, I would say, but like maybe the daily. is the one that's kind of I think bothering you the most because it does have room to go down to the daily B point, and that's a risk. You're buying it above a B point, above the middle of the range, expecting for a continuation. It's like expecting. I've come to recognize that you know what it takes on a day like uh, what is this? But essentially, the day. This is an environment where it really, really did pull back a lot, you know, and it's like anybody that caught this low or this low, you know, or any of these lows in here or these ones had to endure so many pullbacks to their average price and so much like drawback towards the average price on a daily basis. We were seeing that, you know, how one, you know, candle would start, it would end up all the way up here. And we would end at one down here, but then it would have this like giant retracement and take everybody out. And anything that anybody would try to gain exposure to was ultimately just not going to work for them. And the entire time it wasn't working for anyone that got that exposure down there. But it's funny because I think somebody kept all of that and they were accumulating in all of that. And it's like I knew the value of breaking the red yellow line. And basically every single day we pulled back, we pulled back, we pulled back. So I had to mentally condition myself and explain on every single day that, you know, it was about doing the same thing over and over and over again, even though it didn't work effectively. But we were stopped up with a profit every single day that I was doing every single day. We were all about the lows in this environment. And when it went up, it was important to make sure we took off enough to secure the last little bit every single time we were in that low. And it took like it doesn't look like much, but that right there, that's 48 days. Insane. And you know, the entire thing was like 102 days, but we didn't start there. I knew about the red yellow line from all the way over here, and we took that entire move all the way up to take that B point there as well. But every single moment, we were making sure that we were effectively managing long trades, and every single thing always came back. But that was the move to be on for this move. That's what it took, and it's like it reminds me of a day like, you know, like yesterday where it's like on the short term, it really, really, really pounds the crap out of everybody, but they have the best trade by the end of it now. And it's like you realize what you're working for by the end of it is to catch something, you know, and it could be tough the whole day, and it just throws the whole day, and it's just like, okay, here's another pattern we have to, you know, consider and endure and trade and it takes time and then another one and you know like this was originally a falling wedge in here and like it didn't work. You know, like if it fell down as much as it went up, it made another falling wedge trying to go all the way up to this B point, and it didn't even grab it. Like like it, it didn't even get it, and then it finally got it. So like this whole area down here, it was just a very very difficult environment before we actually managed to get that run. And it's not uncommon. I mean, we that's a really normal thing. And I think it's exactly the same way in reverse. Like everybody thinks that, you know, it's down and it's bearish right now. And I just think that, you know, it's like one of the times that we spiked up in the bottom range. And effectively, it's gonna throw more at the bears before we actually come down, most likely. And I wouldn't be surprised. You know how it ended on like three predominant lows like that? It could be on literally the first of the three. Now you want to know why I say that too? Because even in Wyckoff, like where we are right now, could be the first of the three. Here, let me show you. This is a really, really, really interesting kind of idea. So let's second. So at the end of the day, in this environment, we can see we had 1, 2, and 3. But in this schematic here, you can see that it also has 1, 2, and 3 basically, right? And we went over before this N right here.
can be seen right here in phase A, and then we've come down to an entirely new low, which is an SOW in phase B. And literally, we've managed to do that same N, and then dump off of the ST into this area here. So I'm like, could this just be the wave 1, 2, and 3? Just like we had 1, 2, and 3 in the short term, or in the long term?
You know that I keep looking at that, but being on the daily,
Mm-hmm.
to me, the risk is a little bit high since we have the big point at the bottom. You know,
Mm-hmm.
the other day, whenever I got the bottom, I got for like, I don't know, 150 points.
Mm-hmm.
And the tracer and closed me out. So that's where the psychological part comes on.
Oh, I see, I see.
I keep looking at the back off, but then again, we look on the daily. We can have an truncated 5-way.
Mm-hmm.
Might be even forming a AB equals CD just to hit the B point at the bottom.
Yeah, so
The whole thing with that is the fact that what I'm trying to do, or what I've been doing lately, is going in with a micro to put a stop, let's say 100 points below, but hedging it with a mini. For example, if I'm $100 on a loss on the micro, I just cap one mini just to come back with 100. If that makes sense.
yeah, but you would find a completely separate trade, and it would be like a really short-term scalp, and you just basically take it. Yeah, that's fine. Yeah, I mean, you have to, it's like a very discretionary trade though. Like you have to, at the discretion of the trader, you would take the risk to do that because, you could, if the trade goes south, then it's like now you're in a hole past what you could ever fix with M and Q. So the risk is.
The whole thing is at
Mhm,
this point, I became a better scalper than a holder.
mhm,
That's
mhm,
the whole thing. My main thing is I cannot hold a long trade for nothing.
mhm, mhm.
Whenever I go into a long trade, sometimes I'm 150 points off, 120 points off, just to come back and bite me in the ass. Which
Yeah,
the goal is to find a pattern on the daily and hold it for the opponent to play.
yeah, exactly. So like at the end of the day, if you position yourself with like the NQ and the MNQ, you can actually hedge against for the move against your core position. So that's
The whole thing is that the company that I'm using, well, I got Lilo and I got Bullenuts.
okay.
Bullenuts won't let you hedge on the same index. Like
Interesting.
you can add, like for example, you have a long trade on the MNQ, you can add either to that one or go long on the NQ. But a violation of the rules will be if you have a long on the MNQ and then you go short on the NQ, they will close your account and stuff. But this
Hmm.
umbrella knots is not doable.
I see. Okay, so on Lilu, because having the long-term exposure account, it's best to have that long-term exposure on something that you're able to hedge. It gives you an incredible advantage in the long term. So, so I would focus on maybe the short-term account being the one that you can't hedge on, and then the one that you can hedge on. Try and focus on capturing that positioning on the uh, on the Lilu. So like I said, in this area, it could be choppy. It's totally chopping. Not really doing a whole lot. 11:25. But that's okay. The chop comes to an end like every other day, and we can look at other similar times that it was chopping. We can see that it's coming to roughly the same time that it took to make the first chop of the day. And I'm curious. I mean, like, what's up with it? Can it actually finish at the same time? Because it's not the first time that we've used time. We've done it there. Even on the very low, is it not true that it reversed using that same time exactly? Could it be a controversial tip of the triangle moment right now, where we're coming to the end time in this POC in this area. Lately, we've been seeing a lot of the triangular, like kind of expanding wedges, and they've been known to be able to come into uh, this kind of diamond shape where they make another uh, symmetrical triangle. And today it's a little bit lower. Notice they have done a symmetrical triangle after the expanding one. Still, it's just divided by a little bit of volatility. And I also can't help but notice that the efforts that we've placed in putting spike on both sides of the range, and making an equilibrium out of it, testing it equally from both sides. Like the way that I analyzed it in it being equal was actually the way that the market respected, and not just a simple way to look at it being equal, but the way that I looked at it was this way. I'll take that picture of the picture I posted. So when it was here, basically that's the picture. The same distance back to the 188 as we spiked out of the top of the range. And basically we can see I placed the 188 up at the high, and that was where the distance started. And then you could also see the 188 was down here, and I started that distance from there. It was the inside of the range, the outside, the inside, the 188 and the 188. That's a mathematical phenomenon that I would expect the institutions to recognize, but not the individuals. So it's something that can happen again. And as soon as the individuals start putting volume in its path, it will change. So it's like once the herd understands it, it will change. And I can understand that that in enough time doing one thing, they'll get the picture. But if they change the concept regularly, it keeps them on top. And if they're in control of that concept, more control. That's what it's all about. Can't help but notice the first triangle of the day. It blew through the top, retested it fine and everything, but then it blew through the bottom, and it's like it was way more disproportionate to that triangle, proportionate to the range. Now the funny thing is the range was from September or whenever, June or something, I can't remember. But we went over it earlier, and essentially they're from a long time ago. That's all that matters. They're not from any recent area that you could expect many people to still have them from. And one thing that I find is the most interesting of it all is how much precision it bounced off of this range. Like this range, just as any other range would, you can see when it spends time in an area, it grows volume there, right? And a lot of time in here, volume in that area. Now, what do you think it did when it spent time in here? Giant node, no? Bounced off of the extreme of it with absolute. And these two white lines, they're another absolute precision as well. They are a level that pretty much prevented this entire dump like that too. Very intrigued by it because I know that it started from a tiny little range just like that. And ironically, drawing this channel like this is completely incorrect. Wouldn't get the same line. So it's like very intriguing. Usually like what I like to do with those lines when I first make them is I'll make like a bar, you know, in the middle of it. I think the relationship with this is coming to an end. Just beautiful how the accumulation ran just to the final mark. Very impressive. Very particular. Suspiciously particular. The work of the public, I say, very unlikely. Just think about a triangle, end, and we're about to finish one. Made it even on both sides of the triangle. Absolutely fine. Hey,
Can you post the link for an invite on the exclusive? I got somebody that might wants to join.
yeah, sure. Okay, this is an interesting one. This is really interesting, actually, to me. I can't believe that it's doing this. This, I don't remember from before. It did that. I was doing this. Very intrigued. I want to look at the, in both patterns, it's a head and shoulders and it's an inverse. Got a head and shoulders, a high with a higher high and a lower high. A low with a lower low and a higher low. This one, it's got a high, a higher high, and a lower high. And a low, lower low, higher low. Okay. I'm gonna try something. And in the same case, it has a head, left shoulder. But ironically, given the opportunity to have it in reverse, you can apply them. Which I'll post, so I don't have to stay on here for long, because it's quite strange, the mathematical phenomenon. Actually, the high with a higher high and a lower high, and the low with the lower low, and be seen both directions. Pattern, find here. Pattern, find here. And you want to know what comes to mind next is the fact that that ends a consolidation as well. And I'm like, I can't help but notice that our consolidation is particularly on an angle, which means it's easier to break in a particular direction. And in this case, an upwards. And it's the case that it also is true that between lines, it is converged falling wedge. So here, Now, falling wedges are notorious for making little like trap spikes on the bottom, just to try and steal your position, obviously before the bullish pattern versus the downtrend. Now, that's another thing, versus the downtrend. It's an illusion because that doesn't actually come from a downtrend, really. It's the pattern starts higher than that trend does. Suppose it could be downtrend. Suppose it didn't go any lower to make the pattern. Yeah, I suppose it is reversing that downtrend then. But it's a fade, sure. Now, why do I find that interesting? Okay, so it all leads to this point. At the end of the day, where we've got a move like that. Okay. Now, where did we all begin from? We began from doing this, an 8-sequence move, and it's an 8-sequence consolidation. Well, where it spikes out of the bottom and spikes out of the top, and we basically have 1, 2, 3, 4, 5, 6, 7, and 8 times. 8 trends, 8 reversals, 8 times that we've crossed through this middle area, which is terrible. I mean, how is it moving, at the confines of its own, without the confines of a consolidation if it's crossing the same point 8 times? Now, in this case, it's obviously not on a horizontal level. It's on an angle. And the level that's getting hit the most 8 times, I think, is the line. The blue line's been used incredibly well. Well, both of them for that matter. The one in the middle has been used more so as a medium line than any other line. So, like many of the other situations we've been in, we do have B points that have been formed along the current downtrend. Now, I can't help but notice that it does give vibes similar to the triangle that we had originally in the morning. It had a blue line that it had to get back to. However, B points also that it had to get back to, and it's been pretty good about them. Another thing that comes to mind is a pattern that I covered myself, which is 2 highs into 3 lows, which might be like a head and shoulders, but it has a completely different result. It's not to go down. Take the move that brought it into the consolidation and get it out of it. And essentially, this kind of fluctuation could be very much unnoticed by the people just trying to recognize head and shoulders. But come 80, 90, 100, 200 head and shoulders failing, you'll start to see exactly what it is making them fail on average. And it's not always the same thing. That is a common one. Now we can see we focused out of the bottom already of this, and we're testing the blue lines as we speak. I can't help but notice that they're at an appropriate level as well. Same 188, 200 we've been using throughout the day. Initial positive response. And it could be a little grindy. I don't know if it wants to be exactly friendly to the people of this 188. We've got plenty of time left in the tip of this falling wedge. Can't help but notice that the tip of the falling wedge ends at the beginning of this giant range. We are, yet again, on top of this old range that we've been using, the gray white lines. This does give me heavy deja vu, though, to a move we didn't see too long ago. This whole portion right here, it's not the same size by any means. That is the same size though, geez. So that means that when we were looking at this before, when we looked at the 100% extension, let's go ahead and draw that back in there. Take a look at them. I believe it is absolute. 88 with absorbers. The 100 is still yet to hit. Range. The 100 would mean a third consecutive low, putting a lot of interest on this level, which ironically is the B point level. That's strange. This is the old 2-1. And the 100 I was talking about, but the that kind of thing. The third consecutive low, the 61 extension level is also in line B point. And we do have like small B points that are formed in this area here. The one thing that's like intriguing to me is the fact that we've got so much time left. You know, it's like it's very unlikely to be off of one more low. So it's more likely to create another secondary low. Have to be that. And especially when it's like just hovering slowly. Not an attractive thing. Not until it's been too slow for too long. Right now, it's not the right kind of slow. It's the slow that essentially insinuates something like this happen. Maybe that exact triangle, we'll look at it later. Basically like that, a secondary low. Secondary lows are incredibly common. The way that we make W's first. So we can see the B point in the short term could be part of hitting that secondary low. That's absolutely fine. Of course, anybody that's holding from yesterday is still safe. As I mentioned, it could come down to that yellow line. If you did take it to it, you know, taking profit on those hedges is a good idea. Yeah, you know what? I'm just gonna take that and put it up here. Because why not? End of the day, it doesn't have to be associated with the first secondary low, but it's still a B point that's untested. And I do kind of admire the fact that it's on the other side of a gap. A gap that I think that we're interested in getting to, honestly. It's the deepest one. And the blue line, of course, getting its response. Both of them, the underside. Falling wedge getting its wicks and spikes out of the bottom. Which, as time goes on, it will get harder and harder to do that. But with the secondary low and such, it could be at least one more spike. Every spike can have a spring. The secondary low could be in the form of a spring as well, but that's more unlikely. Like, I can't help but thinking the same thing that I thought in the morning, where it's like, okay, we had a clear triangle. It's like nobody missed the triangle, right? And the triangle moved through the entire triangle without even caring about the retest. But it was interesting because it retested from the top side, right? Let's go to our original triangle. Did it not retest from the top side? It did a very good job at like testing the tip of that, right? And it did not from the bottom. That's the main thing. Not from the bottom. And you want to know what it was part of when it was doing that? Is this weird pattern that we were seeing that like I'm not a huge fan of it, but that low, lower, low, higher, low, high, lower, high. This could be like the wicks and spikes that try to be the spring back into the range. Obstructed by the blue line again, short term. It's a matter of time before we were testing it from the other side. It was 161 is the beginning of the gap. Curious about where the 61 is of the dump. Would it get a really important B point? Comes the question. Get all of the B points that are really important, I'd say. One's right here. And the 100% extension, yeah, that is a level that's related to this one. Which I mean is basically our 61 again. Like I said, testing the line from the other side, allowing it to test. Yeah.
Hey, John.
Yep.
There's a new guy on the general non-exclusive chat.
Oh yeah, let's take a look.
He has no idea about futures, I can tell you that. So that would be a good person to teach, since, you know, it's one of those things where it's better not to know anything and start from the get-go that try to convert somebody.
Yeah, out of bad habits and so on.
Yeah.
You see we're breaking it, testing it from the other side and doing all the good stuff. So basically just having, hey, welcome, these are derivatives, they're investment vehicles that allow us to get exposure to major indexes and commodities. We mainly focus on the index futures that follow major benchmark indexes like the S&P 500, Nasdaq index, which is the tech index that follows 100 major tech Apple.
Maybe you wanna direct them to one of the videos that you have where it kind of shows the entries and exits, and something not complicated so he don't get scared, but give him an idea of what the deal is.
Mm-hmm. Mm-hmm.
Hey everyone, how's it going? It's John here for the guy who's trading. I just wanted to go over exactly the processes used to capture the
The
data
test from the other side.
Hope you guys enjoy.
What we've done about this, finding this video, we've get a spike out of the top and the bottom of either side of that range. It's created a new trend.
That black line up there, it is the VWAP band for this VWAP. Perfect. Essentially what we're going to target in the long term, it was relatively far off, and it was a strategic method that we used to get today's syllabus, today we're going to go over the tools that trade, programs, indicators, resources, and where to put those tools to use, concepts, patterns, and strategies, how to understand what we do, the live call, the Discord, the meaning of each line and everything that we indicate on the charts, and creating a path, a plan, a guideline, routine, exactly what is required in order to have that guidance and how to take that information and put it into action. So that's the theme of the lesson today. So the chart is, I would say, the most important tool that we have, period. It leads us to our expectations. Charting is very important to technical traders. Having access to specific tools.
I saw in the beginner's class that I did in.
Of course, for our trend line. And that's an example right there of the last chart that I posted. That I saw in the chat before making the video. So basically, that might look like a little bit much, with a few different indications on there and so on and so forth. We're going to figure out exactly what those mean. So my favorite of them all, trend lines, lines up with any other bearish divergence breaks. So basically,
Yeah. Hey.
I just found for a little bit today because we're packing up and taking the rig back tomorrow morning. So be probably off for a little bit, but be on early next week. So.
Okay. You're gonna be on early. What did you say? Not next week.
Yeah, I'll be on next week. Yeah,
Oh, yeah.
I'll
How long does it take you to drive? A week? No.
No, it takes us a day to get off the island, and then another, well, spend a couple of days in Vancouver, and then it take us 2 or 3 days to get back.
So a week. Pretty much.
Yeah, it should be back like, I don't know, Monday late sort of thing.
Oh yeah.
And we're supposed to have good weather all the whole way, so, you know.
Oh yeah. Okay. Yeah, that weather kind of hits you unexpectedly. I take it, eh?
Yeah, well, now it's supposed to, well, it's raining now, it's supposed to stop so we can pack up all our stuff, end of today, this afternoon, and then we can, head out early tomorrow morning for the ferry. And the ferry takes like 2 hours to cross, and then we're back on the mainland tomorrow tomorrow around noon. And then, we'll just hang out in Burnaby for a couple of days.
Okay.
And then we, see Ryan and stuff for Kayla, and then we, head out from there.
Yeah. We're at a 261 right now to that B point up top. That gives me deja vu from yesterday. Because yesterday, on that move there, we can see that, you know, it came up off of the 188.200, but then came down to grind it, only to basically get down to that to that 261, and it took quite a lot of chopping at that level before it actually reversed, and ended up grabbing the B point. But that entire environment where we, you know, even had a relationship with the 188 and came back to test it from the underside, and then came back like with force to test it from the underside. It was all off of a 261, and very similar kind of environment here, where we basically tested the 188 from the underside, and now we're at a 261 and testing it from the underside. This range, basically, the range that we were sitting on yesterday, this white lines, we're almost at the extreme of them again. And basically, in the morning, I was suggesting any moves that we had overnight, the best play to do was to hedge them. And if you hedge them, now those moves are bigger than the move we had yesterday. And the core is not the high. If you have that position, if you don't, then finding a break position for the break of the current downtrend is the name of the game. This one is more like a blue line now. Of course, getting to it is the first step in breaking it, and when there's space there, it can take a moment. The bottom band of this white bar, I can see we responded to it today, and then came back to it and responded to it with a specific bounce. I couldn't help but think that, you know, would it be appropriate that we made that same spike on the other side before reversing? It's something that I think must be allowed. But the most important line that we're going for today, I would say would be this one. And it stands out amongst all basically the purple, it insinuates that it originally came from a symmetrical triangle. You know, the first like major symmetrical triangle that we had here.
Yeah, the whole day's falling away, Shay.
Yep, that's the big gray. Spiking back to the bottom of it and then threatening the other side of it. That's that's why I say that line is the most powerful line. It is a ways away, but I do think that we'll close the gap and could be off of a secondary low as well, but an even one this time. Not particularly a lower one. And it's like right now we're working our way back up to this line. It's fine. Yeah, this range from before though, we spent a lot of time and a lot of volume around that area, and a lot of time inside of these concentrated areas here. And it's like we've been using this node. This is the second time that we've responded to it, so that means the bigger picture, it looks like this on top of this level. That means that every time that we have that, we can draw this. And this is always more powerful than that. Always, because this move could be doubled off of the secondary low. Now, of course, this move is also part of this move. It's not something that happens every time, but it's also part of this move, where this doubles. So it's important to understand the value of breaking this trend here and not dumping down. It's a pattern where, personally, I think that you know, once we do leave this area, it forms a pattern that has a definitive ending. So this has a definitive ending, and this has a definitive ending. But if you trade this, it takes on considerably more risk. It does. You have to compensate if you do. Doesn't mean it can't be done. You just have to compensate. We can see in here we've created a secondary low in, and it's an even one, right? And essentially we're doing that prior to the relationship with the yellow line. Doesn't have to be easy about it either. We've got tons of space between the yellow and purple line. The yellow and purple line is subject to taking the entire move back and doubling it to the upside. That's the value of its break and being exposed to it. So understanding that this is a risky environment because it can lead to a 5-wave move. But where is this position then? And do we understand where this is positioned on the bigger picture? Because it's not like it's not like it's high. But our secondary low, like I was just mentioning, kind of like we have this pattern. And we saw this pattern before, basically. It led down from roughly the same movement down. And then when it finished, it had this. But being in a completely separate area, understanding that this was 1, 2, 3, 4, and we've got what, 3 drives at the end, 4 drives maybe? This trend still exists. And until it's broken, it will be considered a downtrend. And in order to break that downtrend, we have to break this. So it's like, if we just want mindless exposure to the break of this line, how is it treated the people that understand that, hey, we've come down from this high as a third wave and chopped? And how's it treated everybody that's pretty much just taken the 261? It's been really, really, really rough. What are the odds we return back up to that 261? The underside. And return back to that node. Because I'll tell you, there's another line here. Like a falling wedge, right? But it didn't go up, did it? It made a blue line. And it's like that blue line, a lot with that. Have superstition on both sides. Interesting that it's the 188-200 area that we're grinding. What that means is that at this point, the entire channel has doubled down. Another thing that I think is really intriguing is the distance we have on both sides here. Oh, okay. That right there, like taking this and noticing that it got to the 261. I mean, basically. If I keep it at the same levels that we have now, it did get to the. I'm intrigued by that. I cannot help but notice that there is incredible value for fighting for the downtrend break. As tough as it is, that's not a characteristic of the best reversals. A long, drawn-out drag on of a in series of continuous lows that make it difficult to retain or obtain actually valuable. And that is the story of yesterday. Many of the reversals before it. One thing, how much time is left in this day? I also want to talk about this pattern that we were looking at in the morning earlier and exactly what the result of it was both times, okay? Now, let's look at them. So this was everybody could see this kind of movement here as like a head and shoulders, right? And then it could go down, right? But everybody could also see that this was an inverse head and shoulder. And it led people on, but didn't play out, ultimately went down, didn't it? So in this entire sequence, why I posted a picture of this, but basically why I find that really strange, because both of those patterns can be seen. At the high with a higher high, lower high, low, lower low, higher low. And the result of that was to take the last pattern in the sequence and send it down. Now, I'll show you something as well with this one. Now, we went on to do something very similar. So it came down, up. And I posted a picture of what this looks like. The irony that but they both end up in inverse head and shoulder in this case. And it's not like the three drives patterns don't play out though. Really strange. Going through the entire sequence of things after basically coming out of an environment where, as I mentioned, we do this a lot, right? We used to start our day like doing this, an 8 sequence move, and then we would do something like this after head and shoulders to inverse head and shoulders. That would be second. It would come up second, and ironically, like it's a way that it can end up back in the middle when it plays that out because untested B points up here and such. So it can really give that kind of S wave vibe to it. Fine, because it's also a channel and it comes from something and it ends that same something. And then we've got the other one that I just showed you where it's like, what's going on here? The all in one head and shoulders where you can see both in one move. And it actually, I think it's a 6-wave move, 1, 2, 5, 5-wave move. And essentially, if it plays out, it's 6. But that's the thing, it doesn't. Well, it hasn't, I guess you could say. Hasn't. So what does play out is the drives pattern, which is intriguing because in both patterns, right, where does the 3 drives pattern play up to? It plays out where the people buy the inverse head and shoulders. Like it's like, okay, here's the inverse head and shoulders, right? And then it's like, boom, third low. So we can see clearly when I move it away, there's 1, 2, and 3 lows, right? 100%. And what does it do on that third low? It decides to come back to the first of the 3 lows. So it goes all the way back up to the first of the 3 lows, which is basically like the right shoulder. Allowing people that bought the inverse to get their position at break even. Because if you've got the left shoulder, the head, and the right shoulder, and it just comes down to let you get out at an even price, that's not very nice. No. So we get again here on the next one, where it's like, okay, the left shoulder, the head, and then something goes on with the right shoulder where we've essentially come into a drive. No return has come back to this level yet, though. But it's not okay. It literally has done the same thing twice, and the other thing ended up back at the right shoulder. Well, this one. Well, it is only lower. Now, an interesting thing about that is it is impossible for it to return back to the first of the 3 unless it breaks every single one of these lines. The red or purple and yellow line being the original downtrend, and that basically has to break in order to get to that level. So it's like we're in a room right now, and that's the door. And in order to get out of the room to get to the destination, the door has to be open. You can't walk through it, right? Can't get through it without breaking it. If we run into the door, it could respond negatively. If we exert all of our energy running at the door, we'd run into it and not be able to open it. But if we chop, first of all, if we chop, then more momentum builds up and it's easier to break from one level. If we get closer to it, we actually lose some of that momentum, and maybe it insinuates that there's more of a need for a retest because we've used all of our energy, and it's like, oh my goodness, I need to come back for a second before I go. And it's like that can happen when we run to it. We glide to it, we could blow up, and it's like, oh yeah, this is fine for the retest. We'll just go up off this gap. I'm like, okay, and I'm like, that's very, very, very common. And so it matters how we do it here. It does. And taking time, it could be something that actually could be, not a bad thing, really, in this environment. One, it gets rid of the people that would otherwise be obstructing its ability to run through the blue lines. And breaking all the blue lines at once would be the strategy. Yeah, so is it not true that we came back to the 261 here? Many times we came back to that 261, 261, so on and so forth. And then we had another one. That we just returned back to that 260. I can't help but notice it's doing a pretty good job at trying to make it even on both sides of this channel. Like if we take a look at this channel, if I can click it, this channel, basically. So basically that gray bar that's coming through, it's got white lines, and we can see that this movement on top of it, very similar to what we're doing right now. It's not quite exactly the same outside of the range, but it's certainly consolidating a node that is appropriately the same size as the node on the other side. And I help but notice that. Now it's important to notice the facts, right? Because they're a little bit debatable. You could say it's not exactly even. It's not exactly even, but it is. They are the confines of the range. We could agree that the yellow, where the hell did I get yellow from? The white line on the outside of the range are the barriers of the range, right? Okay, so we've got two white lines. And this is the node that's the supporting white line. That's all of the action and volume we've ever put into the white line. And then this one is also the node that represents the volume that we've spent on the other side of the range. And I'm like, okay, well, I think the market intends for us to understand that. And it is true that in the last pattern, like I mentioned, went back to the first of the three lows, pretty on point. Now you want to know what could change about it is the fact that we might get through the first of the three lows this time instead of just to the first of the three lows. Now, with a big move like this, I think it's testing the waters. Not gonna lie, I think it's very similar to what I was saying is testing the waters. They want to see if everyone's gonna pile in on the first sign of reversal. Is everybody trying to chase it? Because if they are, they're certainly putting their stop or their sell orders inside of the gap here. And that makes it really hard to get through it on low volume. And you want it to be low volume because you get dinged for market manipulation if you put a bunch of money into it and force it through the gap on top of an already accumulated position. How are you not manipulating the market when you're doing that? It would be really easy to catch you. And I think that you get into trouble for doing that. So they avoid it. What they do is they dry everyone out, make them really, really, really low volume. You can see the ATR, just look at it dying right now, right? That's the average size of the candlestick, ladies and gentlemen. Getting smaller and smaller as we go on. Terrible, right? That's not the end of the world. Going to get bigger again. But
But at the end of the day, the effective slowness means that we don't have to put as much money into it in order to make it move. Well, they don't have to. So at the end of the day, the 261 is a major level right now, and there's two of them right here. So we've got this one here and that one there. That one there, it's been treated just like the other one. You know, we're testing it many times from the inside. What does it mean when does it mean that everything is being bought back up below it? Does that mean that every single bit of shares and contracts are getting bought back up exactly to the 261s? And it's not allowed to pass them because they've turned on the machines and they basically buy everything at those levels. They're like, we're not going to get caught for manipulation if we just buy everything at that level. One day the market will understand that it can't get through it. So they're going to be forced to go in the opposite direction. Now, who's developed a really good position from the low for buying all the way back up to that 260? And when the rest of the people get the picture that they can't get through it, and they only show you what volume they want you to see. They don't show you the positions that they've accumulated on the dark pools. They'll put orders on our exchanges, make it look like, should look at, obviously the orders should be placed as a way to make people provide liquidity. I think that's what they're used for. Like they're feeding off of the public for liquidity. Somebody needs to make a caricature on that. I'll hang it up on my wall. But yeah. I see they're trying to test the water still. Notice those orders, those big orders, those chunky ones. They want to see if people are chasing them or not. And I think they're pretty satisfied with their ability to be able to get this through the triangle, ultimately. But will they flood into the gates when it gets above the range is the next question. As I bet you they're thinking about right now. And it's interesting because they are the teams thinking about the individuals, and the individuals just think about other individuals. It's very interesting. It doesn't seem that, and when the individual seems to look into the hedge funds, they look into what the hedge fund feeds them, and I'm like, they just eat it right up, and I'm like, ay, ay, ay. You got to look at the facts as the way that it is, and the way that people position themselves based off of the strategies you find on the internet, based off of the logic that's presented to the average individual. You can almost see exactly like and then exactly how much the average individual is willing to learn. You know, how much are they willing to, you know, recoup once they've learned a lesson from the market, you know? And it's like, at what point, you know, are they gonna fold on it? Especially if they're doing the same thing over and over again, expecting the same result. When their strategy starts to fail, they usually don't try to find another one. Look at that movement, swift and quick. Any movement could come back to test the high of the node we just left, and stepping on top of it is something that we could do in the future. But they're testing the waters, believe me. You can see the hedge funds are moving this market right now, on command again. Either that or somebody's listening, you know, like big big firms are definitely thinking the same way. They're putting their money exactly where the analysis says they should. Now they're testing the blue bars from the node from the upper side, or trying to. They only come back just enough to knock enough people out. When they hit the chunk, then they're good to go. They hit the chunk of people, you accumulate all their stops and carry on. Very, 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 very cruel, but it is the way that they do things on a daily basis. I think that they're so in tune with it now that it doesn't even bother them. They don't even see the impact on the economy anymore. All they do is just continuously fight for a higher score against their opponents. Not about buying things anymore. It's about control and how much of it you have. But this is good as a test of the node as I could ever imagine. Stepping on top of it. Of course, any hedges that have been taken back to the high of the node must be made safe by this point. I do think that that was the ploy on trying to get people in there. That's why the test to back into the node is so necessary, because it hurts a lot of people. And it's exactly what they're intending to do. They're making it uncomfortable. You must really want it to have it, right? That's the idea. Same with yesterday. They know that the value of the break of the entire downtrend is worth at least half of the last one in this case. See if they've eliminated everybody successfully and can move the market freely. I think what they did was is put an order in similar to the size that they were using in the morning, and it moved the market like that. And that's because people are out of the way, because they can move the market freely now. Absolute control obtained, stepping on top of the node. It will move as I say, before I knew about the composite man theory, you know what I used to say? The market moves, there's a way the market is supposed to move at every given time. And it's not a matter of an opinion, but a matter of expectation. And the individuals have opinions, the professionals have expectations. At the end of the day, that's the way I believe it. That's, I guess you could say, my faith in it. That's the way I look at it, because I can't prove to you that it is that way, but you best believe I believe it. So I guess that's what faith is. But you can have faith in things like, I definitely have mathematics as a strong substitute for that faith, which I think is one of the best, underlying like that, and like, I don't even know what you would call it, but the logic that you face when in the name of danger, because it involves your emotions, it involves how you react to things, how you respond to things, how you plan out your journey, and how well you're prepared for your environment, and then how well that environment comes and hits you, and how well you respond to that hit. What would you call that? Because I certainly consider it. At the end of the day, it's not like something I was taught, not by a person, but by the market. By understanding that you have to understand that there are these components, they can either be accepted or neglected. And that is everything that I go into. I go into things that either have to be accepted or neglected. Nothing opinionative at all. Only facts. And basically, I'll talk about my opinion on the institutions and stuff. Sure, right after I tell you exactly that they're going to move the market and they move it, So I'm like, okay, yeah, this is my theory on that. Sure, but it's not something that's ever like I never base like a trade off of a theory. It's always off of actual facts that have cumulatively gave me a probability that I can otherwise understand there is more reward than risk associated with the endeavor, so be part of it. And you know, how well you can place yourself amongst the environment. Like how well you can see that the trade's going to work out from one spot to the next, but does the chop at the 188-200 get you out or something like that? It's how well are you responding to that environment? How well do you fit in with that environment? Were you able to take like 3 trades off the 188-200 and build up like a 40-point buffer so that you can hold the rest of it, at ease just to get to the target, to make sure that you've got that? You get to a few targets, now you can hold more. What's wrong with that? And I'm like, is it part of a plan, or is everybody's just focused on the money so blindly that they don't even have any time to plan? No time to watch market, too busy making money. I'm like, what? Hold on a second. So we got to make sure that we're covering all the barriers, internally, like with our emotions and our relationship with the environment, and how well we can read the moods and how well we can fit ourselves among them. And then there's the whole technical side of it and understanding what strategy you're going to implement and what system that you're going to use to be able to make sure that you get through every single one of those strategies safely. So like you might have a strategy for a head and shoulders or an inverse head and shoulders, and the environment might suggest that strategy says that, hey, we're going for the failure of these patterns, and that is your strategy for that moment. But your system will have to underlie exactly every single thing that you're going to do when you make a trade. How much quantity are you going to use? Where are you going to take positions off? Are you going to let some run after that? Are you going to know how to manage it? What are you going to do with your stops when you're profitable? And are you going to have to think about it while it's in the middle of trading? Or are you going to have a step-by-step process that shows you exactly how to maneuver your stops throughout each trade and everything like that? Because it's like when I look at other professionals in, like a doctor or something like that, they're all full of systems, that are backed up by information that they understand. Same with the mechanic as well. Like, how can they begin if they don't have understanding? What are you supposed to start at? You're going to guess? Because people guess in this and they think that when they win and the card turns on or something like that, that it's not going to break down 30 minutes down the road because they haven't really fixed anything. And they don't really know anything, and they don't really know what's going to happen because they're not in control. But the mechanic that understands, or the doctor that understands the human body, or whatever it is, whatever profession, you can rely on them to understand what they're supposed to do, and they're going to understand the system. They're going to have, a strategy for the actions that they're doing for the entirety of the process from beginning to the end, and know a knowledge of how to complete, their and they're going to be able to explain themselves. They're going to come to you and they're going to say, hey, this is exactly what I've done and exactly why I wanted to do it and what the results are for you. And that's what's, people for, I don't know. I guess if you're a professional in your own way, you will relate to those things, even if you work with other professionals, it depends. I don't know. But I definitely respect it when I see it out there. 100%. I can't help but notice that the the inverse head and shoulders and the head and shoulders, they've gotten really sloppy at making them. Not gonna lie, like it's become uh, a lot different than how it was. Like in the morning, we saw today that this was the first kind of movement that they gave. It was like, okay, this is how we do head and shoulders now. And it was like, okay, all right, the right shoulder's a little bit high there on top of the left, but it worked, did it not? At the end of the day, it played out a giant dump that essentially came back as an S wave. And this is the method that it used to do that S wave. You know what's really funny? It made a tiny little inverse head and shoulders down here. Like if you look at the 15 seconds, clear as day, but it made a low with a lower low and a higher low, and everything is positioned accordingly there. And I'm like, the audacity to do that, really making it clear at this point, because it is trying to do this and become an S wave. And it did that. And I was like, oh, that's weird. And then it was like, oh, you want to keep playing the game? And then what it did was anybody that tried the right shoulder on the next one got a new high, which is intriguing. Because it then went on to go down into these lows, which is like 1, 2, and 3 lows. And it also went back to the first of the 3 lows before continuing with absolute precision. And then it had the audacity again to try another inverse head and shoulders, and it did. Low, lower low, higher low. Except the right shoulder was on top of the left. Ironically, when we get that, it always seems to come back to the shoulders. The big move that comes after, because there is a big move that seems to happen after we've done that sloppy head and shoulders variant. I'm like, what's up with this? Is this really trying to be the right shoulder? Because it's so sloppy. But I mean, I'm not going to complain, but it is weird that they would make it so sloppy like that. You would think, like, if the public had control, they would make it really clear They'd be like, oh, everybody's on board with this one. We're all going to be doing the head and shoulders this morning. Everyone would be like, okay. And then they would just go and do the thing. We're like, we're making so much money on the same pattern. It's lovely. Why don't we do that though? Instead, there has to be opposition somehow. And the lack of communication between the individuals is just appalling. If I was looking from another species, or another from a third party perspective on our entire economy, it's very strange, really, that there is the individuals against the people with all the money, and I guess they have all the record. Like they know what happened in '67. They know what happened, in '35 and stuff like that because they were around then. They weren't born then, but they had to understand it before they started working for the company. So it's like, is that an advantage? I think it is. Incredible advantage. But you know, it can be read. Like I believe technical analysis is it is a language, like a mathematical language. Like when we see, like I explained this before, like when I say a word, like what the word means, and it's like when and a collection of those words makes a sentence, and that could have even further meaning, and implication. But when we have a pattern, it means that there are certain facts, like certain implications, like certain trends have to form in order to make that pattern. If we focus the different facts of that pattern, we can come to an understanding of the way that it is. And if there's a part that pattern insinuates it's supposed to do, like if we make a pattern and it's supposed to make this move, we can see how well that move fits into the current environment. Because there might be a range, and it's like, okay, let's say for instance, if you're trading in a range that's got a red zone and a green zone, and it's moving back and forth, you can see that bearish patterns are typically more attractive in the red zone, not the green zone. Things that are going to come down, you want them to be higher in the range. The bullish patterns you'd like to see in the support area, the green zone, and that's obvious, right? So, but maybe it's not. But at the end of the day, you want to make sure that you're focused on, if we are in an area that has been used as a green zone in the past, does it mean that there are more, you know, there's a potential that we might see the same bullish patterns that we had when we were in that area, that we might be able to use them again off of the same area? Because it's like the market remembers. I'm constantly shocked with how much the market reminds me that it's still using old levels. It's actually incredible. Ultimately, we should see it through it, but negative responses have been common, so it's important to make sure that you're safe by the moment that we get to the trend line. I can't help but remember that back in the day, like some of you may remember, when we go to the daily and look down over here, these levels, what we used to have is negative responses to the downtrend. Like it happened almost from the beginning of this entire downtrend where, we would even have like trends like this, and it would come and hit it and have a negative response. Look at that one right there. It came all the way down again. I'm like, what the? I remember. And, it did that so much. Like, even with this line, like, look at how much it took to break that line. You must have really wanted it if you kept it, right? But we could see even on the short term, like, trading back up to that blue line was the name of the game of that break of the blue or break of the red yellow line is what it was. And I can't help but notice that the high of the rising wedge, Like this high of the rising wedge it's like a blue and white line, right? And it's never ever ever been tested. Never tried to test it. Well, I tried to, but never got there. That's the high of that original level. At some point in the future, we will that line. I don't think that it's going to be like a major break initially. It's going to be something that'll slow it down heavily, and it could be after another major gyration to the high that we see that line. It could be from a higher point after the break of the red yellow line. Not very popular. But on the short term here, we can see that everything underneath the 261s I was talking about suspiciously particularly accumulated up above it. I can just go ahead and make a little gold zone out of it if I want, like that. I don't really need all these other fibs. Like I do like the idea of understanding where that 188-200 is, because you understand how we came from this 261, and now we're testing this 188-200 from the underside, right here. We had this one before, but we responded well to it and almost played out all the way back to the B point. Didn't quite make it. Made a secondary third low. And the one thing I want to go over today as well that was really like important to the distancing for me was this. I have it in a picture. Because I think the particular nature of what we saw here will be seen again. From this small B point in here to the 188-200, and then from this small B point here all the way down, almost to 61, but what it did was the same move on the top of the red zone, and it was from the 188-200 back to the red zone, and this was the 188-200, the same distance away. That was the distance that it went back to that mean. It used that level. It didn't get all the way down to the, and it wasn't the same distance on the top and on the bottom of the green zone. It was outside, inside. So it's huge. Yeah, I often I've talked about that. So like I said, the trend break wasn't meant to slump a bit. Slumping where we are slumping to is gold bar. Didn't happen to notice that every blue line has been stepped on, but this is the first step on it. I also can't help but notice that we're approaching the tip of the triangle, and that the crappy inverse head and shoulders that was formed here could turn into head and shoulders. Like the idea that maybe now it's here, inverse, like one move away from making case.
because that, it is a B point that's already hit. Can be of interest again in the future. The fact that we are responding to it's 261. Even though we've played out from the 161, the 188, now the 261. It also rings both these major 188 getting its heavy response right now as well. Everything has been bought back up to it from the underside, which basically puts a lot of confluence along this level. ATR still continuing to dump off there. This could be a step on top of the orange RSI line as well. So like trying to connect with that so that it could step on top of it. Yeah, because it is awfully similar to this movement that we've had here, except even it's smaller. But even when we look at the momentum from that time down here, and it's just step on top of it and make that move. Now, of course, it gets us to that same position that we were at before, where I was like, we can make an H, and patterns can come of this, but it's not necessarily good to play it how it can create two different things. And essentially, this was that in reverse. Then it created an M. But the next time it forms, which we've seen here, next time it formed, we're basically at this point right here. Like that's basically what I mean. I'm just saying that that's the same thing that we're doing, and it did move for move. One of the ways that we against the trend when we do, because is it not true that both of those moves are contained within the purple and yellow line? So they're all contained within the same downtrend. Yeah, you got some fuzz on top of it and such, but that's okay. At the end of the day, it is acknowledging it as the downtrend, and until it breaks, it is the downtrend. So that's fine. We are getting close to the 61, if not at the 61. Of this short-term move. I can't help but notice as well that we are running out of volume profile node. Not much of the volume has actually been placed below this level. And I can't help but notice as well that it also is the low of this gray bar with the white barriers. We are testing it yet again. And I can't say that it hasn't tried to make some sort of Wyckoff out of this. Like, let's talk about that for a second. Okay, so on this chart right here, we can say that this Wyckoff is started within the relationship of this gray bar. Now let's go to another chart so it's clear. At the end of the day, what is the Wyckoff? Let's put it here. And it's the one that we've been seeing in reverse. So we're not too far into it yet. We're only about this far into it. But let's talk about this for a second. Let's break it down a little bit here. We've got the PS, which is here. And then we've got this movement down, the selling climax. So preliminary support, selling climax. That's this move here. And then we've rallied back up to test that as the automatic rally, right? Rallied right back up. So we've got that move down pat right now, right? But we come back down for the secondary test. We've done that right now, right? This is the next move to get back up to the high. Now, I'll tell you one thing. At this moment, right, we have completed phase A. We all understand how phase A can be like that. Like, it should be very simple. I can make it is PS, and then the SC, and then the AR, and then the ST. Then that. I'll post a picture of it up. Short term, 1 minute. And phase A has been notoriously one of the only phases that is incredibly good at forming. Everything can go south at this phase B here, because phase B, you know what it does. In every schematic is very triangular. I've noticed, and it shares that characteristic a lot of the time. So one thing that that everybody starts to notice by the time that we get into phase B is that, oh crap, it's a triangle. And it's like, okay, well that's like everybody starts to get into this kind of hands-off kind of environment. Well, the institutions do. The individuals just eat it right up. They start growing this node right here, and everybody starts trading inside of that node. And it could be good for the institutions to accumulate off of, but essentially, it just seems to be the reality of it. Even the schematic says, everybody just loves the middle. And I'm like, okay, so what's the value of us creating phase A? What can it do? Like, what are the things that it does? Well, in this schematic, we can see that. On there. But the schematic, it has a high, a red zone, and then a green zone. Because what is the support lines and the resistance lines? Support identified as a green zone, and then the resistance lines. I don't know why they're so far apart, relatively similar sizes used, but that's okay. At the end of the day, this is an interesting visual representation of how to really look at it, and put that here. Take a picture of that and post it. But okay, my point is, it's not just that it's got the green bar and the red bar. My point is that in phase A, you can see that in the schematic, that these lines start from there roughly, right? Like the construction of the resistance lines is arguably beginning inside of the preliminary support, where it first acknowledges that level as a support, calls it a barrier, and then we come back to smash it from the underside, right? Because that's what is happening. And off of the selling climax, the predominant low that we've made, obviously that's the first low, and that can construct our green zone. So I'm like, well, at the very least, like I say, sometimes they don't like to, do phase B move for move or nothing like that, but you just get the picture that it's potentially starting the confines to a consolidation, is what it could mean. And there's a couple different ways that it can consolidate. Now, I'm all game for it not to do this whole thing because it takes forever, but it can leave sooner if it wants. I much prefer to personally, but as would everyone here. Now, another major thing as well with this is like it doesn't have to do just one schematic. There's another schematic that we have to be aware of. Now, it's not incredibly daunting or anything like that because there's only one difference, and it's right here in phase C. And it means that one of them can lead to a 1 and a 2 and a 3. And I mean, how many times have we seen that throughout our just not even a white cop, but just 3 lows in general? What do? Well, the 3 lows, we got 1, 2, and 3, and it comes back to the first of the 3. And I mean, sometimes that's all it gives, but it tends to give it. That's a good thing to know. And at the end of the day, that is subject to change when a bunch of people start piling onto it as well. And we'll notice exactly the differences. But in this case, the phase C is the controversial phase that can happen after our consolidation. And in phase B, it puts these confines to the test. Now, just remember, where we are right now is actually trying to make this. And, I have a weird quarrel with the way that these are actually drawn because I think that not naming this point is crazy, in my opinion. Because in the other schematic for the reverse of the entire thing, the exact same, that's not the exact same, this is the exact same in reverse. And they name it the UT in phase B, and it's called upthrust. I mean, like, that's an upthrust in phase B, and I just call it an upthrust anyways. Because I'm like, how do I refer to this point if they haven't named it? It's terrible. I mean, why would you name it? But I guess it wasn't important. At the end of the day, maybe it is named and it's just not named on that picture, but not as far as I can see. They're pretty good about making it clear how many points there are, and it looks like they've missed these ones. It's okay. At the end of the day, the relationship between the support lines and the resistance lines can also be seen in the node. Like, we can see that throughout all of the volume that we spend inside of this consolidation, the node grows. And I can't help but notice the head and shoulders came to an end, so that it could fail 2 or 3 drives. But where does it come back to? The spot that people would have shorted it, like taunting them almost. And I'm like, well, I can see that this spike right here, this protruding out of the top, is very similar to the spike that we had protruding out of the bottom, which leads me to believe that this area, in the middle, is getting wicks and spikes on the highs of the range, and they're the ones that happen at the extremes of the red zone and green zones. That might seem obvious, sure, but I like to make it clear. And it's like we saw this earlier too, when they would come back to the people of the right shoulder. Let me find this here. Oh yeah, like this inverse head and shoulders right here, where people were like, all right, inverse head and shoulders. And it's like, okay, it's going, it's going, it's going. You saw how crappy the original one was, so this one's not even far different. That was the one that just worked for everybody there, right? They see the same pattern in reverse and it's bigger. So you think, oh, bigger. One would think that's better. And then what does it do? It dumps through the head into a 3 drives pattern. Because how do you ever make a 3 drives pattern if you don't fail a head and shoulders? Because it goes inverse head and shoulders, and then boom, 3rd drive. Like, whoa, where's the inverse head and shoulders now? And all I see is the 3rd drive. And that's what happened here. But don't you think it's interesting that level right there, that first of the 3, that is the original left shoulder. And the right shoulder, you would think, would be at the same level as the left, right? Unless we're, lopsided head and shoulders, which is, you look up on Google, they're at the same level. And it's ironic because the pattern will come back to that level. And the people that played the inverse head and shoulders, and they were part of this, they lost money. And all they get is just what they traded for back. And it's very, insulting to them, honestly, if you think about it. Because it's like the market really didn't respect that position. And it doesn't matter if it worked or not before, because it'll have the audacity to be like, in order to get all the way back up here, they made like a little inverse head and shoulders. And then it had all of that movement. You see, that's crazy, eh? And then they make the big one, and it failed. Almost with just as much movement, if not more, to the downside. So it's like, well, that's interesting that you can get the same components, different size, smaller, and better, bigger, and it was worse. Contrary to popular belief, I bet. And now, why would an individual ever set that up that way? It just boggles my mind that it would be set up that way so particularly. And I mean, well, can we see it again set up that way in the future? That becomes the major question. And what this all came out of. Because this came out of an environment that was pro head and shoulders. Like, we loved making head and shoulders as part of our consolidation. There were days that would go by where the entire day was a movement, just like that. Day would begin here, end of day would be there. And I mean, yeah, that's a pretty large movement, but it shows that both of those head and shoulders and inverse head and shoulders were both ineffective at making it move outside of the consolidation, which is terrible. Because you want to know what this pattern is. If you look it up from the inception of the beginning of the pattern, and I'd be very careful with the first thing that comes up on Google because anybody could apparently be there. But like we saw with the ascending triangle. But it's meant to be a reversal pattern, and one of the major things that I think are missing out of the head and shoulders pictures is this. That kind of movement is really important. Now, it is the case too that we have seen it work as a continuation pattern, but at points where the market is suggestive of reversing, and people try to trade a bearish pattern for a continuation, when it's supposed to be a reversal pattern, it seems backwards to me. You know, it's most effective when it's reversing a trend, you know, and it has something to reverse and can come back into. Yeah, and I just noticed another thing on the highs over here too. That this level here, it's like a high with a higher high and an even lower high, and I can't help but think that that was very similar to it here, except in reverse. I just noticed that, and I know it was a three drives there. Like essentially anybody on the short term would have been blown out of a head and shoulders right there. So if you took the right shoulder, it made sure it came to get you first, and before nothing. Oh, okay, let's look at this again. Remember, phase B can be super grindy. It doesn't have to follow the exact move for move, but it loves triangulating. And I mean, you know, instead of being a one big old triangle like that, it could take like, you know, this triangle and like move it to here, do it there instead, or move it down here and do it there instead, and just grind. And the idea that it's just doing that grinding right now, where, you know, in history, to be interested in this part is for it to come potentially down into a third low. Because that's what phase B is all about, really. Putting everything to the test, creating the support lines, testing the green zone. But it can do it in a really slow, crappy way as well. That seems to be pretty quick about it right now. The red zone getting its response well. I can't help but notice the amount of volume is very strangely distributed amongst this range. Now, in this case, suppose the red zone could be the same way, like that too. Leave it for now. No. As I mentioned, you know, whatever it does give right now, it could be part of a bigger picture triangle, like formulating the support of it, perhaps. There's the POC popped in right there. That is the heaviest volume node. Oh, now it's down here. Easily shifted. They just came back to attack the green zone. Secondary test in phase B. I'll just take a picture of that. Why not? Curious about the other chart. Let's take a look at it. We're doing that three highs and three lows. We've got three lows, which puts emphasis on the first of the three. Like that right there. Of course, the risk doesn't have to be taken if you're already in, but Definitely comes down. What was that, 95% of the way or whatnot? I mean, we've seen that a lot. 94% retracement. I put that in there not because it's a fib level. I make gold because it's like literally, look what remains. The people of the wicks and spikes. That's not very many people. Not many of the public, at least. Because that's what that's a depiction of. Now, is it true that we've managed to make the same spikes on either side of it? Like, is it doing a good job at that? And do we have a B point in here? I know we hit this one. But what about this one? And where are we in terms of its fibs? Okay. This looks a lot similar to the spike that we had originally. And the third consecutive low in the second. The controversial 261 creates a little bit of a blue line case that we're interested in testing from the underside. Testing from the underside. And getting on top of it and testing it from the other side after a secondary low. Okay, so double bottom like on. Every spike can have its spring, and if they call it like a spring and then a test of the spring. I call it a spike and then a spring. And of course, the downtrend gets put at risk of breaking the short term, or I'll have to break in order to do that. And the level I think it's very capable of returning to is this one. That's the B point anyway. That BY and the B point and the POC. Not a level is more interesting than that one. The brutality of it all is that in the sequence of things, it still may only actually be here. We still may actually get an entire gyration through the entire movement that ends up making it spike and spring. Ironically, the other schematic may save it from not having to make entirely new. Because the way that I see it right now is that we've made the ST low and the ST low, and this is now the ST in phase B. ST low, the ST low, and now this is the ST, which is the lowest. So far, we return back to the blue line to make a secondary low, and the secondary low does have a lot more impact on breaking the downtrend. I'm curious about the fibs from this major key point as well. You're at a 1 6. Yeah, we're underneath a lot of the volume. A lot of volume that kind of comes in here as well from the beginning of the day. And it's like, are we under the volume as much as we were above it? Kind of. But you know that move, we might actually be making that exact same. What I think we might see at that point, and a sooner, always better. Taking its time could. And it involves the return back to the entire look. I can break the other untested woods too, because it's done a really bad job at grabbing these. Never even tried, has it? They are untested, so it's nice to understand when we run into them. And even this level here, I'm like, what's 88? That level's right down here. Some could say we were responding to it. Because by the end of yesterday, like what time was it here? 10:59, eh? Okay. Then 19 was a 161 reversal back to that by the end of the day. But ironically, that's not what I was looking at though. I think that this one was the 188 that I was looking at for the end of the day there. I just remember it being at that same time. And I mean, like, it ended up taking that entire mint here, placing it here, in a method of being able to reverse S wave. Very, very basically, the return back to this node could be a little bit tough, but we're getting better at breaking this downtrend. There's a new one that breaks it in that trend. Another question that is raised here is kind of panel seen before to the one too long ago. Questioning whether that could fit in environment. As of right now, we are responding to both 188, 200 fib retracement levels, and what's below that is the panels. It does pose an interest to me. And it's like, how do we respond to a level to show us that it is, you know, a barrier without spending time at it and without reversing at it? And when the trend is so close that it can't reverse at it or spend time at it, puts it in an interesting situation. An ultimatum between the two levels, where only maybe more candles could maybe fit on top of that 188, 200 area. If we make a spike to the green 188, 200 area, that is directly associated again with this level, the low of the node. And that low of the node basically that stands out above all. Basically, like we saw earlier, this range at the top, at the point of that green bar, is doubled exactly down. That's the another intriguing level that I think that we're going to see today as well is this could be aware of when we do get into that area. As you can see, there's barely any space left between, and essentially going to be it's going to have to readjust in order to maintain. Big break in it's another way to readjust it, but a new trend will form every time that it does that, and it's not going to be as steep as the last. That's the irony. Because when it's not as steep as the last, then it's not as easy as to break as the last. And it doesn't offer as much immediate reversal as a steep trend would. But some consolidation could be formed, and I've been noticing lately, like whenever I've been calculating the injections of institutional capital, it's been shopping, and then it's come down to a moment where it's clear that they're interested in making it happen, and that's towards the end of the day. I've noticed it has been typically, at least. It doesn't have to be off the first jab up that it gets there as well. Typically, this is like testing the waters. If people are in the way, they'll manage to make secondary. Probably like 70% chance. So towards the end of the day. But everything below the range is likely to be bought back up. So it's like, as I've said here, everything below the range is likely to be bought back up from what I can see. Also placing a move on top of the range equally is interest before the end of the day. I don't talk about the gold bar. Yeah, it's honestly the same idea as yesterday for now. The idea that we want to position ourselves for the same kind of movement here until otherwise. It case things can change, but I'm honestly likely to. You know, like when I look at this and I see that we've come down on something that looks roughly like an M, you think it'll need a W? I think it does. And just to go over the power of the W after the M, you know, like the same is seen in a 5-wave move. Goes up after. It is longer than the 5th wave. And that could mean that we're interested in making a third drive potentially. Fine. The slow nature of it is never an attractive initial entry. It's suggestive of further spikes. You've got to be careful of short-term spikes that stop you out before it actually. Those are the best entries typically in environments like this. Like movements to get back towards the 261 as well. Like anything that we can see that comes back to that 261, because we've been notoriously trading back towards them now for quite some time. And just tapping it, it might not be good enough. We might want to hit it 3 or 4 more times, so it's good to just make sure it's safe to continue holding if you did take anything by the point of the trend. The green zone should break shortly after. Oh, it's a 241 thing. Okay. So would it be normal to stretch past the 261 to hit such a level like the 241 fib channel? Because we did have another area to consider in here, and it could be the distance between the 241 and 2. Now, personally, I want to know what that looks like on the other side of the range. I think we're going to do it on the other side of the range. Honestly, I think we're going to get the range. This level, there. Okay, a level that has to be allowed to test. This one here, I'm going to take off all of its other fibs. And I'm going to leave this area here as a gray zone because that was the 188-200 area. Just to give it a little bit more clarity there. Oh, just to make it clear, I'll pull this. Turn size the other one. Basically, this is like it's what I call a confluence zone, and it's confluence of the 188s all clustered in together. Look at all that volume that they put into that 188. You know what's funny? Is all of it was stopped out, but it was taken onto another exchange. That's why we don't see it evenly distributed, accumulated. And the movements are quite they're changing in the amount of force that they have per movement. The candlesticks are a lot more concise. Two previous trends broken. We're in the current one, and it's retesting. Not only retesting the trend line, but the 188-200 that it didn't respond to, which is really strange treatment, to be honest, if you think about it. That original node right there begins very, very clearly at that point up here. And I can't help but notice that this move here, it's like sloppy left and low right. Remember how we had the morning. Started out this. Then managed to pull off this. Is this so far off? Because we have one component here. One component here. Those are the consolidation components in both patterns. Okay. And then the spike that protrudes beyond them. That's the head always. Always the head. The head. The head. Components are all there. Does it not take 1, 2, 3, 4, and 5? 1, 2, 4, 5 to form it. To play it out takes another one. But to form it, 1, 2, 4, 5. Got everything formed at that point. The day of the sloppy shoulders. Say that, I'll remember this day. It is the day of the sloppy shoulders, that's for sure. And I mean, what happened at the beginning of the day where it was all mishmashed into one major um, head and shoulders into inverse head and shoulders? Very strange. For it to happen again, twice in a row. When I take that off, you can even see it here. You know, it started at a high, higher high, lower high, low, lower low, higher low. Didn't work out, but neither did the other one. Because it had a low with a lower low and a higher low. But it also started from a position where technically it followed along the same tracks as its original, which is like a double of a pattern that, like, you know, it's not on Google. It's butchering the crap out of the pattern that it loves doing, and it squished them both together, the bullish and the bearish one. But yeah, this movement right here, I'll go ahead and just move this arrow over. It's a controversial phase B that ended up basically taking everybody's positions that accumulated inside of the Wyckoff, and they're going to buy it all back without these people and then go and hit their targets after. That's what's ironic about this situation. They get it from a better price, and what it looks like by the end of it all, this. We could get quicker movement on the other side of the gray bar. This isn't even the trend that I'm interested in, it's this one. Yeah, I'm taking this off. It can mean the right shoulder could form here as well. You know, it could rekindle. You know, if it does that move here, will it not be a fourth wave? 1, 2, 3, 4. We do the fifth wave as the first again. That get us the rest of the way. Idea. Pulling back is normal in an environment that suggests a consolidation, and eating up that pullback shortly after is quite normal. Now, Could it take as long as the other consolidations becomes the question. I'm not going to complain if the fifth wave is elongated and not the same size as the first wave it was before, but in reverse. You know, I find fifth wave and such, it's all great, but I still think it's not safe to drag stops above the node in the event that it decides to get used at the bottom of the node there, in line with the 61. It's an interesting consideration. The fibs just 50. So far we're at the 23 and grinding the node. If all the node is what it wants to grind, then that's fine. It's not like it's amazing hedge or anything. Getting through bar is the main, and that could involve a fifth wave that looks longer than the first. And the first is pretty long. It's like 1, 2, and 5. If it did the first again, I'd be undercutting it. Now it's intriguing because the third wave is not the largest. And it is here. It went 1, 2, 5. Like, is it so structured to be part of an M into a W? One funny looking W. Cool with it though. So far, what it's suggestive of is that we may use the same velocity on the way up that we down, potentially quicker for parts of it. But like I mentioned, getting through the gray bar could propel the price forward. Harder push. See if there's people chasing it, but I think they've been weared down. Also, the change of the hour is coming in 30 seconds. Beware of volatility at that point. And it's like, why am I noticeably noticing or why am I noticing that it is testing the 23 from the underside? I mean, what is the 23? Why is it even very, very, very much a strange fib? That not much of a retracement at all. 50 would be appropriate. 61 would be more typical.
Repelling through the gray zone hardly, but we will be shortly. Tensions clear. You know, this kind of consolidation, what I can see, has a negative impact on the individual, and any profit that they do have is subject to being peeled off to barely any sizable position left by the end of the consolidation. That's typical in an environment like this, and I think that that's what this consolidation is for. And it could be a second wave, which is tragic, because the third wave could be on top of the VWAP. A move to the 50 could offer an interesting short-term play. In the event that we get below this node, needing to come back to it via hitting the B points from the underside could offer a short-term profit, but you'll see. So far the grind is very particular, and it's along the same level that we used at the 188-200. So it is as though we are at the 188-200 to many different fib sets, to be honest, as well, to 2 different fib sets. Basically, that's this node, and all the volume that we've spent responding to it initially, and then testing it from the opposite side. Another way that you could say the pattern is not intended to be, but instead I can see that there is absolute precision, the 241 fib channel green bar at the bottom of the day. That point right there, actually, left. Actually, no. If we again getting old. Quick snatch of all the stops before we carry on. Quite typical, I'd say. Response to the blue line yet to come. The blue bar, or you call it. Beginning of the blue, which the blue line really represents it. The bar, never as important as the line. The bar, sometimes it gets a little bit off put. I'll fix it in a second, but the line is elephant in the room, just clear, the blue, the light one. And obviously no getting to the yellow bar or the blue and red line without breaking it. So it's like, as we get closer and closer to it, it becomes an ultimatum of, are we interested in this node so much, or are we interested in staying beneath the blue line so much? Because as time goes on, the blue line is in favor of us breaking it. Come tomorrow, it will be very difficult for us to be beneath that line, having not exerted an incredible amount of energy to stay below it. Which is not impossible, but it is unlikely. So here's that 50 I was talking about. We're almost at the 61. Testing the 50 from the underside is what I'm interested in here. So getting back to that green line, very, very small, short term, boom, right there. That's just an intrigue to me because it makes the, it shows reeks of absolute control. I don't think it's the public that's moving the market. They're just basically seeing if everybody's in the way. Can they swim freely, or is everybody going to be blocking their path with their sell orders at $20 to $30 profits and stuff? They can't take it. They'd rather accumulate all the positions that they have and then hold them to the actual target. I'm sure that's been said. Because if they're providing so much liquidity just for a small profit, I could see that irking the market makers and the institutions that have been trading for years, understand the targets, and when they see that people have something good and they give it up so quickly, and then ultimately make the trend falter, after everyone's accumulated properly. Not a nice thing. Again, if you traded back up towards the 50 from the underside, everything underneath it has been bought back up to it. The idea that we're testing the underside of that node also. We've got other B points that are up in here too, but they're not the ones the market's been interested in. It's been the 50. We'll be interested in this in time though. Sorry. We can see yet again we came down to hit the 261 another time. It's also in conjunction with the 61. And on the very short term, there will be a trend. Basically forming, it's broken a couple times already. The old trend does lack a retest, but provides an opportunity. Interested in the new trend that marks the very, very, very predominant two highs of. I think that can also be seen on a support line here. I find the distance that we made out of the bottom an intriguing one, and it's subject to being on our ignition candle when we do break the trend. Watch out for that. And even this move here, I find it suspiciously particular. Looks like it is double the size of our range. Looks like the size of our range. And seeing that is also an interest of mine.
as rudimentary as that analytical method is, it's really clear that you want to be lenient with it. That's what the scribbles suggest is you don't want to. It's not a matter of absolute precision when it comes to it, but a matter of understanding that this portion here could do its best at being equal to this one here. And the time that like the circles insinuate that it'll take a specific time. These do not tell us that see same size on either side, roughly same kind of movement. And these two yellow lines, like this is exactly the same as this one. This one, it's not actually a trend line. It's a duplicate of the resistance. See, they were interested in the short-term B point. I'm gonna turn this down a bit. Oh yeah, and also that it's actually truncated. Okay, and it's like very interesting to see it go from 5-wave move into something that could equally have been considered a 4th and 5th wave. Like, is this far off our 5-wave move? Could it be, part of an M into a W kind of thing? And you know what I like about it is I'm like, okay, this distance, it could be here. Like if we decided to make that distance a minute, look like this. Got a green. At the end of the day, that would be the distance of this area doubling, right? We've crushed this beep. Now there's a new one. It's down here, but it's not to be focused on incredibly. Be part of the retest. Also take into consideration the step that it made on top of that level. And here, what they can represent on the other side. Green dash line is an untested point profit target for any position that's captured in the direction of those green dash lines. They go up. Is it not true that those that have exposure to the entire downtrend break and the break of this bar also have exposure to those levels potentially? And it's like capturing the final low. Is it worth the exposure all of the way back to those levels? That's the idea. By a time like this, there's more than enough profit on the table no matter what security you trade to be able to secure enough profit to stop at the extreme and to retain some position and exposure to the highs. Now that may have already been done by somebody at the low, and having that stop at the extreme means that you've endured this pullback and you didn't have to take it. If you took it because it was a 61 back to the 50 or whatnot, or a break of the lines, or wanted exposure because you saw value in it returning back to the VWAP, the gold bar, getting to the bars above, all the green dash lines. VWAP. It's the exact same move had here. Hasn't quite duplicated. Definitely got, because was this not associated with this move after? And could this move be associated with it again? Becomes, yet it's not reversing the highs. Could it be a way to meet back to the equilibrium? One giant. It is also the case that at the point that it made this high, it ended the consolidation. And it did the case of running back into that blue line, which is a pretty significant line. Now, getting on top of that blue line directly threatens the break of the blue and red line, which is an intriguing level for sure. Because in order to break that line, we'll be well into this node up here. That node up there kind of means business. It's definitely a big node. Now we've had such a concentrated amount of volume into this 188, 200 gray zone here, and it's formed the POC. Now we don't have as much volume down here as we do up here on the whole. It's just it's spent more at this place than it has at any other place that it was up here. You know, because throughout the time that we've been in this area, it spent this area here. That looks like a preliminary support to me, actually. Take a look at that. Again, with the Wyckoff from earlier, like I mentioned, sometimes phase A is all it likes to do. But is it not true by this point that we've done this, 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 and this, and that, which is the same as all of this? It is the exact same as that. I just happened to notice that. So is it true that we're, again, you know, consolidating in a similar way that we did before? You know, constructing the support and resistance barriers as we did the time before. Same way. Oh no. But it's quite intriguing though. Now, this one doesn't have to play out the rest of it either. And I don't think there's enough time for it to really do it anyways. So getting through the bar maybe on the agenda more. Elliot, wait, or what is it? Wyckoff. Where we are now could be ended quickly by getting into the blue bar. You know, what it suggests is an entirely new low. So it's imperative that enough profit has been taken to ensure any safety for any positions that you do remain holding. However, there is incredible value in continuing to remain exposed to the break of all short-term trends. So it doesn't mean, you know, give up. It just means that you have to brace for impact. If it wants to end it all right now by saying screw the rest of us, let's go up, I'm not going to complain. But if it is this that we have to endure, then that's fine. And sometimes it goes and does this one, right? This is the biggest problem, honestly. This is fine. This one, however, is a problem for nearly anybody that's long from this point. And you know what's great about it? What time did we end the last one? Did it not end at the time that we're at right now? This sequence? Let's talk about that for a second. What phase were we? From phase? And we were working this area. We came up for the UT in phase B and just fell through the ground, eh? Uh-huh. So what are we doing now? Are we not there? Schematic? Just look at phase A and phase B. I'm not trying to make it too complicated. Phase A and phase B. This is all that we have on the chart, so it's all that we really need to consider. It's got the downtrend even, got the downtrend. And, preliminary support. Like our gray bar across the top there. Bottom. Ironically, yeah, where we would... If it did what it did last time, it would go all the way back down and then fail that part. Should make a really nice W, not gonna lie, but it already has a W. So like, okay, well, could we that one? I'm sure it's becoming a have to. Now, one thing that's interesting about it is the fact that we have a similar time spent on both areas. We don't have much time left if it is to spend the same amount. Give or take the preliminary support. Slap that on there too. Absolutely fine. Not the end of the world. But what would that put us at? Change the hour? I'd much rather just leave it now, though, to be honest. That happened. But quite a controversial level as it was last time. And the controversial levels in an area where it's notorious for doing this great and everything else kind of trash. Sometimes you'll see the entire fluctuation, but phase B is a very powerful phase to end everything. Because it takes a long time. And opinions can be made in that time very quickly, what I can see. And I also admire how the 61% of this entire move is looking like a test of the B point, test of that low of that node, and the VWAP there. There's like some pretty heavy confluence around that area. You have to understand the B point to the major fib. The distance, the VWAP from the entire consolidation since it all began, that is where the average price of all the contracts and shares are trading on the Nasdaq since we started that range above. And I mean, we've got one down here and we're not using it very well at all, I don't think. I mean, it's been used well, but it's not being. The other one's more interested thing in my opinion. I think we're going to have a better relationship with that one. But in the future, we may see this one again. I'll remove it now because I don't. It's 261 down here. But where we are responding, it just so happens to be what I call the medium bar. It's just what I call the medium bar there right now. We're just hitting that X marks the spot area, busting all of the downtrends. Beautiful movement. Allow for a test of the upper side of the VWAP and the green line. The green line loves to get tested. And it's a line that nobody has because it's never touched the price ever. Yet, watch the market respond to it. And also, we're coming back to the 61 from the other side as well. We can go ahead and take all these B points and move them down here. Because ironically, no stop is safe above that gray zone. And we blew this right out of the water, and here we are. X marks the spot, the same distance out of both sides of that original channel. If I go ahead and just put that on there. I'll even take a picture of the original post. Remember, you know whose team you're on. That's the deal. Public don't move the market like this. The major big players, and they're in line with exactly what I've been saying all day long. The idea that everything was accumulated back up into that zone and every single person that was part of that sell-off, now a loser or a buyer. That's the reality of it. And it's in the name of this huge bash where it's like you can tell it's a singular entity just forcing its way through past every single entity that there is in there and just, claiming the day. And this is whose team you're on. That's the deal. Being exposed with the aspiration of breaking those lines, I don't know that I don't understand another strategic method that could offer you more than this. Every B point's been hit in this last trend. We're almost working our way onto the upper zones. Unbelievably, I did not think that it would test so soon, but they're on that level. Amazing. Multi-day hold too. You don't think about folding your entire position. And if you hedged before, you can find the value in hedging again. Back to the red and blue line is one of them. There will be a move back to the red line, it's most likely. We want to be careful. Any stops dragged above the red and blue line are subject to getting smoked out. So, at the end of the day, we just stopped at a red zone. Can we go back to the green of it? That's another interesting point. Of course we could. Why not? And in the event that it's off of one of the green bars above, being the exact same distance out of both sides, I expect this to be the case ultimately, but it's going to involve testing on both sides. It's going to involve one last touch of the blue bar most likely. And no hedges that are taken should be taken with more than half of your core position. If you have 1 NQ, no more than 5 MNQ, because that means you have to lose twice at the same level in order to catch up with how much you're making on the core. And instead of cutting your position, you hedge the position. It's better than losing your best price at the low, the one that you fought all day for, the one that you have. And you want to keep as much of it as possible. What tools can you utilize to be able to do that? Hedging. You can use your stops. You don't have to drag the whole position up. You can drag part of it up. If you want to drag part of your position up, like keep one stop and you can leave the majority at the bottom, that's safer. Finding a hedge though is going to be the name of the game. The best way to do it is to make things even. Even less than half is fine initially, depending on your position on the day. Determine how much you can allocate. Well, let's talk about what I said about this when we were coming down. Everything below the range is likely to be bought back up from what I can see. Also placing the move on top of the range equally is of interest before the day's end. The gold bar is something that can be used for profit taking near the support of the range, also in conjunction with the green dash lines, dash B points. The move has been riddled with B points and can be captured with a position that runs into the end of the day again, same as idea as yesterday for the end of the day move. Here we are, smoking into all of those levels. I'll just reply to myself there, and I was replying to that. At the end of the day, we did it again. You want to go over yesterday? I'll do that as well at some point. We're in the middle of it right now, but we'll go over yesterday and how exactly it that level I'm attracted to relation run be a multi-day run, which it wasn't a multi-day run, but this is the same attitude. Basically, going. yesterday's a thing of the past. There's more accumulation being done on this move than there was yesterday, and it's from a lower point. So you got to think of the reality of it. It's worth more for every single one of the targets, and it's not wise to fight against it. Only with less than half of your position if you ever choose to. Make sure it's a tight position. Make sure that you use a stop, and you want to be like looking at these levels here too, because I mean they don't get away easily. Like any stops dragged above these levels are subject to getting absolutely smoked out. So you gotta be careful. And it could be quite a large move. Like we could see a 61% retracement by the end of it. Doesn't have to, but it can. So if it can, then let's make sure that we're prepared for it and not lose the best price. The price where clearly these people saw so much value in your position. Or maybe they don't. Maybe it's just all luck, So I doubt it though. Contrary to popular belief, what was difficult to obtain, it was expectations that get you through the day and continue to allow you to persist with moves like this. And what time did it happen? 2:30? This used to be a controversial load up spot back in the day. I can't remember how long ago that was now, but I remember it. Bad with dates. Don't even. At the end of the day, the green zone is getting tested from the other side. The last time we saw that, we were on the other green zone at the very bottom. A very phenomenal move. And if you look at the play-by-play, it was like it's not only just this low, but it's also this one. Like this low, the expectations that I set, not. Okay, so basically, right after I posted the one that posted before this one, uh, major. So watch out for the test of the underside of the 188. And we saw the 188 was in there. We're going for all those B too. But that's the 188, and I made it the gray bar. We just hit the green zone and spiked through to the 261. Any movement be seen as a larger spike back to the 188 in the bigger picture. Back to the 188 in the bigger picture. And then, basically, as we went on, I continued to post a play-by-play, which we're hitting these B points up here now too. We're about cleared every single. The 261 is something to get something that's getting the underside test right now. The green zone should break shortly after. Multiple tests of the 261 could be on the table before breaking trend. Allowing them may be a good idea. So like you see, that 261, that was right there. I marked it. So allowing for that to test is a good idea. So if you allowed for that to test, you allowed for the exact pullback the market gave. Now all of the B points are cleared. A test to the green bar from the upper side on the table. Yeah, so basically, after I posted that about the test of the underside, I was like this. I was like, oh yeah. Zoomed out, check that one out. The gray bar highlights the recent node in the 188 cluster. I've made that clear that that's what that was. And then got there. Fine. And then once we dip down after that post, short-term target was attained. And then, you know, a new consideration, the same distance to form on either side of the gold lines. You know, and I put it on both sides. And for the people on the stream, I even gave you the X marks on the spot, and it blew right through it and killed every single line on the chart, blew every single target that I had on the chart. You know, like I said, you don't want to be too interested in going to the ones in the bottom. That's why I grayed it out, and I'll do the same with these other ones too. But they're becoming more of an interest the more that we can threaten the uptrend. Now, of course, a trend like this is no longer that interested to me. Go ahead and turn it down, or go ahead and look here. Where's the 61? Are we at the 61? We're at the 61. Like it. My mental measuring tape is correct. At the 60. Oh, no, I want the high. Thank you. Now, coming back to that 61 is... So just allow it, right? Most likely it'll come a little bit through it, to be honest, actually. The break of this line is a huge problem. It's a red-yellow line. It's not a fun line. It's not a trend as your friend. Farther away we are from it, the great, you know, huge. Let's get as far away from that line as possible. Make it so that we have a support underneath us and has to break like 5 supports to get to it. That's wonderful. Keep it going. But at the end of the day, the closer we get to that, the tougher it's going to be. The more we have to think about hedging. But what are you going to hedge it all the way to that line? I tell you, if we get to that line right now in the next 2 minutes, it's likely to hold it. You know, although it would be a huge dump, it would have exerted all the energy required to break it in getting to it. Not that I think it's going to do that, but what I think it's going to do is testing this gold line from the other side, which is something that can happen at any time until it happens. So it's not a very good thing to get exposure to upwards movement beyond that line, because that should all have been done beneath the yellow ones. But of course, there's no better way to have done it than the way that I've stated, to be exposed to the downtrend breaks. Now, this red-yellow line doesn't mean initially just jump in willy-nilly and get exposure to it, but actually understand the value of its break could be quite large. Like, is it going to become the case that, you know, now we can get to the B point until there without breaking that line? Do you know that if we chop until here, that line has to break before we get to that B point? Now, that's interesting. It becomes a fact, though. It's not even my opinion or nothing. So it's huge. But yeah, here's that yellow line from the upper side. If you took that as a scalp, like, that's wonderful. Make sure you're profitable 100% by this point. It could come back and you could do it again. So be careful. So if you took 3, you might want to take 2 off. You might want to take 1 off. It's up to you. But take something off in order to make sure that you're safe. And make sure that... And I'll post a picture. So we did not only this move from the bottom, it went out the bottom and then out the bottom again. Not quite triple, but a 241. Okay, now we go into the other side, we can see we managed to do the same thing, except it's done more. Now, how much more? Take a look. I don't know. I'm like 341, 361, eh? Interesting. Very interesting. Been a stopping point for many days past. I make it a gray bar usually. And where we use that, um, all the way, uh, a lot of similarities in this chart right here. Did today. Go ahead and take all of it just getting bought back up. And if you're not giving it up, if you're holding it for days, then you're on the same page. You're on the right team. If you give it up to fight against it, you're already suffering, and that's tough. You don't want to do that. You want to fight against it with less than half of any position that you're holding from the low. And anytime you think about giving it up, try fighting against it. Might make some money, or you'll remember why you should be keeping it. Best advice I could give all day. But only those that have the position from the low have earned the right to fight against it. My opinion. And every single B point's been cleared from, including this one. The audacity to have made the third low at the beginning of the day. Remember this. Let's go back to the beginning of the day. This giant falling wedge. Let's talk about it first. What happened yesterday to make the low that everybody wanted? Oops. But the idea that we do the downtrend, and it was like, oh yeah, it's not working, but it was. Just wanted all of your, and everybody gave up. Now that's the thing, and I can see it. And they found that window where they could thread the needle and broke every single trend, got to every single trend line or trend break and level. And it's like it reminds me of what I was talking about earlier on the daily lows. When we fought and we fought and we fought and we knew the value of what it is to be exposed. And if you can manage a profit off of each one of the pumps, it's not bad. Because you know what? It goes back into 17 days ago. Do you remember doing it? No, and if it becomes what you do, what's necessary to catch the lows, what's necessary to be positioned right from the bottom, then it matters. And that's what's the important part. Not giving up. Persistence. Which, I mean, we've determined it's perseverance at this point, because it's not like it's easy. It's easy when you capture it, sure, but what can lead up to that, the amount of hard work that goes into the analysis and understanding and hit the nail on the head is intriguing. Now, as we can see, we're coming back yet again to test that yellow line. Everything is not safe above that line, eh? Tough line. But remember this range from the morning, because this was a range that was related to another one. We used both of these areas in the morning. It strayed far away only to come right back to where it started. In the reality of things, that's what a lot of people will be seeing. the one thing that many people will be able to comprehend out of the market's movements without putting any analysis on it will be that that is the case. By the end of the day, everything was bought back up to where it began from. And it's like, what does QQ do? Not sure that, but I was just interested to see where the pre-market and after hours really ended up lining up here. Could we be interested in a right shoulder? Take a look at the hourly. Is it not true that if we make a consolidation of equal size on the right, it could be a right shoulder? But do we have to make it? No, we don't. Instead, could we go on to breaking the entire downtrend? You know, one of these yellow lines. Let's take a look at what they look like on the short term here. Getting pretty close. Remember what I said about the three? Put a rope. And testing the gold dash line from the upper side is normal. That's an old level. Different gold dash line to what I have on the other chart, but still, I think it should be allowed. Now, you know, when I look at all of this movement here, yeah, the POC for the entire day is right where it began, and everything just reads that it has come back to that level as a medium point, and I'm very interested in making that entire move. Because is it not true that earlier in the day we were talking about it and it was a spike on the top, and we were looking at it when it was down and it was projected to be this move? Worked like that. Go back in the recording and find it. But quite remarkable. This is what it takes to be able to do it yet again, and it's more than what people have. You know, it's tough. It's not. They make it tough. It takes a lot of time, a lot of patience. The one thing that really makes that easy is having an understanding. And it doesn't matter if you're going for a long-term move. Do you know how many short-term moves must be considered in order to catch the right spot? You know, you can try and hit the nail on the head with long-term analysis and just be like, oh, I'm going to roughly get exposure in this area and put my stop, you know, so far away. I'm like, no, keep it tight, keep control the whole time. And you know, you want to fight for that entry with low risk at exposed at each time, not just buy randomly at the market and then have a really wide stop expecting it to just be fine and not get you out. And then that's not keeping control, but a lot of people do that. And that's like a thing you want to grow to be repulsed of, you know, because like, you know, you know the value of what it is to put the work in. You can see the reward is great, and it is worth putting the hard work in, and it's worth making that hard work easy because you do it all the time. You know what I mean? There's nothing to put all the analysis that I put on every single day. It's definitely something to begin with, like, you know, where you're like, oh my goodness, it's a lot, but I mean, like, I've made it so that it's not that way for me. It doesn't feel like a lot. You know, after all, it does move really slow. Like the market's movements, like if somehow time sped up, but we still thought in the same reality, I would be fine with that. Like if the market moved 3 times the speed that it does at any given moment, I think it would be fine. I would be able more than that. It would be quite interesting. And I think that you know, you'd have to be a little bit more selective. But as of now, there's more than enough time to understand all of them and to be part of them. You know, in a way that makes sense. And you know, when you look back in retrospect, can you not find a sensible way that the market has been moving and explain that exactly, you know, so that you understand it? And when you can do that, then you can understand that the market has been moving sensibly. And if it continues to do so, you look for that understanding. You know, look for that those kinds of characteristics to continue so long as we are in that environment or that area. So like what could change an environment, you know, like
what is it? Just our price level, like, because we're in between a red zone and green zone. Yes, that could be an environment, but it's not just that. Like, let's say, for instance, there's a report coming up, a big one. It can change the environment, the attitude of the market, the anticipation of a big event. I love moves like this because there's no big event associated with it. It's a nice reason to accumulate. And honestly, if you find that there's some sort of an event, I wouldn't be surprised if news events, if news articles are released to try and um, uh, mitigate the risk of being caught for market manipulation. Because if you own the news companies as well, and you can release a report at the time that you're injecting cash, all the people are like, "Oh, that's why it did it." No, of course it's the report, and everybody just eats it right up, and they don't look into you at all. So it's perfect. And they do that. They all do that. I hear it all the time with the reports, and I can't get enough of it. And it's just too much. And it's the professional world too. Everybody's just always like, "Oh, about the reports," and I'm like, the reports increase volatility. I like the reports because of that reason, not because of what people are saying. I don't wait to hear what anybody has to say at all ever. So it's like I learned the hard way, and that's the way I've learned always. And because of that, I don't really learn much the hard way anymore because I understand it very well, and I can try and avoid those same situations, of course. But the hard way is a good way to learn, in my opinion. But it could be an expensive way and an unnecessary way. But it was necessary for me because every single person that I talked to, or any single person that I tried to find, they could never give me concrete, definitive answers for exactly the reason why the market was, and put a mathematical, factual analysis on that, and then explain it in a clear method, you know, and repeat it every single day with consistency. I'm like, go. We can go all day, all year. And yesterday is just another hard day that comes into a nice paycheck for the end of it. And everybody's going to be like, "Oh, I know what happened yesterday. It's not going well for me to hold." And they're not going to hold it because they've been weakened. And now we get more movement. And the average individual is just like, "Oh, it's been so bad for me personally, so I think because it's done that for me, it would be crazy for me to assume it's going to be doing something different." And they would become weaker, and the market knows this, and it uses it to its advantage. And the more that you trade, you'll come to realize that this is the case with a lot of the situations where people are tough on it, and then they give you exactly what you had before, a little bit more than it. And after a hard day's work of trying and trying and being really on edge, it's so easy to just say, "Ah, this profit is so much better than getting back into that way I was feeling earlier." And then you give the position up, and you can't get it back. That's what's going to happen. That's what happened on the daily lows. And we have to be careful giving up the position because nobody thinks about hedging. It's all they're just thinking about how they feel, and they're like, "Oh my goodness, my emotions, my emotions, my emotions." We hedge it, make some money off of that bad feeling. Let's actually trade it back to the gold dash line, make money off of that. Do it 5 times. You're not as worried about it coming off anymore. You're not as worried about the red and yellow line anymore. After having taken off a little bit of profit and traded against it, it's a very, very, like, more emotional you get, the more you should start analyzing about, what could actually be the problem, and is it so clear that you can make money on it? And if not, why do you fold your position instead of making money on it? Because if you had to report to somebody that was like, "Oh my god, like, he's going to hold me in check and it's going to be like serious, he knows what's going on, and I'm working at the firm, and I don't want to lose the position and all that," and it's like they're gonna be on you. They're gonna ask you why you did what you did, and the individual is just like, finish my day at 10:30, love it, completely sold out of the positions, and it's like, oh man. But when you're held accountable by like people that make you like shake in your boots when they come to you, it's like you learn quick. And I look at this like, now instead of having those people, like, I think it's wise to have that kind of relationship with yourself in the future. Like thinking about how you let yourself down if you don't continue to work. It's only yourself, that you let down, because they're not going to come at you But they would, and then you'd be like, oh man, now I've learned how to actually keep this position going. It wasn't even for me. It's because those guys are so greedy, and they're like, well, hold on a second, start figuring out ways that we can make more money. And it's like, well, okay, holding some right now and focusing on hedging is what I've suggested the entire way up. Then if you use less than half and you don't, it's not let you trade twice at the same level. So I don't really know where you could trade on the way up twice at the same level to catch up with how much you're making, So it's like, okay, if you hedged it like 40 times even, but all at different levels, you've just been making 5 contracts worth the whole way up. You not the full NQ if you have one NQ. And there's nothing wrong with that. But still, it's like you'll get better at that in time if you make it your habit, and if you hold yourself accountable to it rather than just folding under the pressure of your own profit. It doesn't sound very good. And I'm like, well, that's the case though. And I'm like, this is from my experience. It's not like I haven't folded under the pressure of profit. I've sold for a quick profit before, and it's turned into a really really big one, and I could have made a lot of money. And it's burned in my head before, and it was on volatility index too. So it's a very very hardcore security. I don't recommend. I barely ever talk about it, but I do I do I used to trade it. But nonetheless, the Nasdaq moves incredibly clearly. There's no need to really look at much more nowadays when you can develop a good relationship with all the short-term and the long-term movements on the Nasdaq. It can keep you really busy throughout the day. And of course, all of the skills and analytical tools you use to analyze the Nasdaq can be used to analyze every single other index. It's just like, okay, that could be like how the Nasdaq was moving in 2012, and I recognize the patterns that Bitcoin's making because it's doing those same patterns and it's in that same environment being treated the same way as it might have been in 2006, as it might have been in 45 even, like it's very common. The stocks will go through cycles, and even crypto will now, and you can do that and in different ways, and they all have their own ways. And do you think it's important to understand those ways, like, okay, what's a normal technical way for it to be moving? Like, what patterns is it making? What patterns is it trying to making? What patterns does it fail after it makes? And instead of just jumping into the trade, just because you've got an account and just because you're sitting there because you got the day off or something like that, and you're there trading, it's good to actually have an understanding of all those other things first, to sit there and just be like, okay, let's see how it moves. Let's see how my idea has went with the market. Like, does it respect my next thought process, or are you just going to jump into a trade? It's like, let's get an expectation first, and how are you going to do that? Maybe you just sit down. It's like, oh my god, expectation right away. Now I've had that many times before, sure, but you don't want to start getting you can get greedy with that, and you come in and it's like, I want that, where's my initial morning pump, coffee booster? And it's like, it's just slow some days, and you'll take positions in aspiration of it doing something that it's always supposed to do, and it doesn't do it. And then, it becomes like, well, maybe the recognition of the environment was off, and that comes like with, you reflect on what you've done, and it's like, oh, well, maybe you just jumped into a trade right off the bat and it wasn't good. And I mean, I think that those are important things to consider, because we're all human, and it's like all of those things can be done, and it's good to just understand whether they're good habits or bad habits. And good habits don't shout as loud as bad ones. Just like emotions shout louder than logic. In my mind at least, and personally, I've always seen that be the case. And especially when I was first starting. Now it's like I don't really see emotion at all. I'm very emotionless, when it comes to trading. But at the end of the day, the all I can see is what I understand now. It's like I don't feel anything about it, because usually when you don't understand, you go to emotion. You start to feel worried. You're like, oh my goodness, what do I do? And now I've done something, and I don't know how it's going to affect me, and I'm freaking out. And it's like, that I haven't felt in a long time. That's unacceptable in my books, right? Like, I'm like, what? Like, that's insane. So that is something that you never want to be putting yourself into a position, because you don't deserve to be in that position. It means the market has full control over your position, and and you're at the whim of whatever the next move is. And you know, it's best to make sure that your move is in line with a understanding, um, rather than an emotional feeling. You know, which is interesting because a lot of people, they'll say, "I'm getting into this because I feel." Or whatever, and that's a problem. I just recognize that as well, because you might not recognize like how you're saying what you intend, and if it is saying I feel, it's something that you're not really certain of, it would seem, right? Like there's something that that you can't put a concrete mathematical proof on, because you would never say I feel like 2 plus 2 equals 4, right? It wouldn't make any sense. But it would mean you're uncertain. In other words, it means the math needs to be checked, because feeling is not acceptable in math, and it should be the same in this. Now we've made a triangle. I think we're going to see this triangle again. I think we have seen this triangle before on the other chart. Beginning of the day. Take a look. Turn it up. Kind of the same way. But it's a beautiful consolidation that really separates the people that were on the fence about continuing to hold and those that understand about the continuation. And anybody that traded back towards the yellow line, was more than enough profit in that move to be able to take enough profit to secure yourself. And now we're in the 188-200, which I do believe we're going to try and test from the upper side. So we have to be careful with that. Now remember, this range, this area, okay, it used to be used as a red zone and green zone. And there's been a lot of gold dash lines around here. They're kind of cluttering this situation. But they all come from being 61s and 261s, ironically, from all near in this area, So I'm like, it's like, I want to know, like, what's up with this one right here? It's on top of our 261. Like, that's weird. So I'm like, all right, we've got a confluence between 261s at a level like that. I like that, I think that somebody else might notice. And they might be in charge of this run. Okay, for some reason I can't take this one too. I'm trying to butter all of these lines. I mean, I can take this one off too. This one off too. This is, it's an interesting one when I can see that they will make. Okay, we've just busted through this to test from the other side as well at some point. It could be off the 261 that we decided to do it, but the 241 was used on the bottom, was it not? And the 241 is the map. But I like that. I like that too. I'm like, do we consolidate the same amount that we did here around that area? That would make a lot of sense to me. I'm like, well, if we. But then again, I'm like, well, hold on. If we want to come down, we want to go to that level. We don't want to come down. We want to figure out a different way here. 61 of the entire move. Down. Let me figure that out here. That. I think we might be interested. The 61. Ah, yes, so we're actually coming up to it. No. The red zone. One right here. Thicker, sure. That is the 61 of the entire downtrend that
have from Monday. And I'm like, okay, when I look at all this volume, I'm not really looking at this stuff down here. I'm just looking at the volume profile. Volume profile is very large, and it means we've spent a ton of volume on that level. It could be used as a stepping stone. And I can't help but notice that that's right where our 188-200 is. And coming back to step on top of that, it could be used as a platform, but only if it's necessary. So maintaining is the key. And instead of having all those lines on there, what do I do? Put another gold dash line in there. We know that the red zone is the 61 of the entire downtrend. Or you know what I'll do? I'll just type that in there. Different way to communicate. Of uh, that's that red zone right there. Already dimmed them out because they were old anyways. That one. That was the one I've dimmed today. B point. Oh, I like it. Ironically, that offer a pleasant entire high of the morning. Remember, like I said, multi-day run. The value of putting it down on a day like today. And I'm like, what an interesting similarity to what we had yesterday. Because don't you think that it's quite strange? They have the audacity to take the same pattern that was yesterday's low. Look at that one right there. Do you see the best price for everybody that could see it in retrospect? And then they come into today. They're like, look at how tough they made it. But it wasn't because it was grindy, but because it was precise, but because it was, something that was actually on a spectrum like this one. On either side of the spectrum. We've not only just doubled it, tripled it, and done it on either side, we've done way more than that now. 561% retracement since this blue bar. But it wasn't an initial blue bar that went up, one that you had to fight for, one that you had to recognize, had to come back to that blue bar, that had to break that blue bar, that the real value was exposed to the downtrend breaking. This line is the uptrend, but it doesn't matter until we can get close enough to break it. At the end of the day, it's almost done a 661% retracement. That's unbelievable. At the end of the day, worth looking at the daily. You recognize that you're in from the wicks and spikes on the bottom of the daily. Again, you have a chance to be in for a move that gets us back to the high. But some of today will be eaten up into. It's very likely. So with that being said, the focus can be on hedging on the short term against the move to come. 61% just got an initial negative response, and we can see that on the very short term, we've moved from the high to the low of this green bar. And I'm like, you know what I like about this here? I want to see a Wyckoff. A crappy phase A Wyckoff. That's what's good. Just phase A potentially. A little bit of phase B. But right here, we could be interested in doing an N at those levels. So any hedges must be managed at this point to ensure safety, continuing to prevent that it's threatened again. Further hedging made. Now remember what I said about coming back to the 188 200. You know, we can see that it's the case that the 241 was the high. If you go back into the recording, that's the one I'm looking at as well as the 261 because it was the one from low. At the end of the day, the 200 and 188 is getting its full retest from the other side. Is it like the same move it did here except in like verse? That's not how you get the triangle in reverse though. How you get the triangle in reverse is the angles are matched. Same kind of consolidation in a different way. It's fine. It's true we got some B points like crazy on this. Take a look at them. Hmm. This is a B point, but it's not. They're all very, very. Now I find it intriguing. This area here was our area for pre-market movement. Now I had a node, right? Now if I pull that node over here, we're just running into the top of it, no? Bottom of it, the green zone of the the VWAP here essentially. It's like essentially two VWAPs have almost wrapped. Oh, the support is underneath the node. That clearly, there's no up on top there. But I can see that the 188 is there, and we were talking about that before when it busted through it, testing it from the other side would be something of interest because it's on a node. And doing the test from the other side, especially when we've blown through it, lately has been the case. I do think that we're going to see another test of the upper VWAP from the underside, but it is putting people to the test. And remember that these ranges are set up for them to chop like this. And back in the day, there used to be a node here, and there used to be a node here, and there wasn't much space in the middle. But what I've noticed is that when they do that, it leaves a gap in the middle, and the gap can be filled at a later date. It doesn't like to be filled instantly right in front of people, but only the people that have marked it get to see that it's actually interested in putting volume where it hasn't had it. And right now, adding volume on top of that area would be adding volume on top of our node. It's like it reminds me of when, like, okay, let's look at this zone down here. Do you notice how there's two ranges? There's a red zone and a green zone, but it also has the capacity to work like this. I think it's actually very similar, in the bigger picture up here. That this area here could be considered as like a red zone, and down below could be green. And I think it might be trying to show us that right now. Because it's left explicitly the point here. I think that's part of an S wave. But we might see a little bit of wicks and spikes to try and get people out first before it's safe to remain exposed. If you hedged it, you're in a better position than if you haven't. It would also be the case that in the event that we saw the 261, coming back to the 61 from the upper side is something of interest. It would also be the third consecutive. I don't I don't I don't think it cares though. I don't think making a third high is actually going to get back to this. Best that we get back to this one before. I find it's controversial and no stops should be dragged above them until we make a step beyond this area and claim this as a support. Could take some time, could take some overnight movement. Very curious to see how the overnight session is going to respond. although the hedges should be safe by this point, good to make sure that you have something for the 61 in the view app below and such. The B point, of course. But at the end of the day, the hedge is likely to be threatened. That's fine. Therefore, insurance policy, profitable. Enough contracts should be peeled off in order to make sure that in the event that it hits your stop, your entire account is reflected positively by the endeavor, and if it can't be, it should be cut while it's at a profit. Pretty straightforward. No. If it's not, then why not? That's the way I think about it. I love the way that it's. Is it not true that the confines of this area are supported by the green zone of the supporting range, and the resistance is the resistance of the upper range? And that since we've used them, we've used the green zone as a support briefly, and the red zone as a support briefly. What hasn't gotten its response? From the red zone initially getting its negative response to getting another one here, to getting a response after to make up for the fact that it wasn't a resistance really at all. And the same kind of treatment going for the green zone where we ran into it and spiked past it only to acknowledge it from both sides and then carry on to the red zone immediately after before clearing the beep, going past and stepping on top of the red. And the green zone here got its response briefly before coming through it, back and testing it on the first candle from the side, and remaining to have a B point underneath. The amount of consolidation that we are having here is very similar to the consolidation we had. And I got that triangle from 9:30. Market open. Would it be appropriate to place the spike on either side of this triangle, or we've definitely added a bunch of volume in between the two nodes? You can see that it's thanks to this volume and this volume alone this node exists. And the amount of time that we spent in that triangle, very similar to the amount of time we're spending in this one, as it's the same triangle. And the amount of volume that we placed at both of those levels is also similar. Reminds me of the low, though, but in reverse. How we had two spikes, equal size, roughly similar distance. I was interested in this. Well, it was a little bit more than our average consolidation. But could it be used? I think so. The highs. That might be a bit of a stretch. Was it the case that they were also passed over? And maybe it is that move then. Interested in. Well, I look at this move because maybe it is the same distance I'm trying to make. But end of the day, of course, one thing that pops into my mind is the fact that we've come in consolidation from a spike. And it's clear there. And does it happen out of the bottom before? Because every time we do this, we create a downtrend, and the same kind of downtrend that we had when we were, oh, same kind of downtrend that we had when we down here. It's not true that we moved up based off of that pattern. And the biggest portion of the entire day was downwards. Because at this point, they've all either succumbed to being buyers themselves, or they're at a loss from continuing. That's the reality of the situation. Now we're at the POC, making the spike out of the bottom as we did the top. And returning back to the triangle is on the table, like back to that node, so we have to watch out. Little B points have been formed underneath. You know, it's interested in all these like that. We're also interested in the same distance made out of the top and the bottom. You know, that the move that you capture back to those points could be the same as capturing a move back to one like this. Could be part of the same move, part of the same exposure. Because the question becomes, in order to get to that B point, is it not true that we have to break this line? So the break of it could be like the door that begins the journey. It has to break to get to it. Well then, assuming that it's going to get there beforehand is a little bit of a waste of time and breath, right? Because if it has to move so many different ways in order to even get to the line, well, that's a problem. But when we don't have much space with it, and we've already exerted a lot of energy to maintain it, it becomes kind of like an intriguing ultimatum. Whereas the support barrier that we have strong enough to take enough time so that we can break the trend? And when we break the trend, does it have enough impact to change the direction? Because it's the only way we ever will change the direction is by breaking that trend. Possible for us ever to go up again without breaking it.
So it's like, okay, unless we're downhill from here on out for the rest of eternity, well, that line is holding. But it's unlikely. Incredibly unlikely, matter of fact. What is more likely is that it takes a small amount of time to coast along through that barrier. We could be on a wave 3. So that means, okay, we could have a little bit of a consolidation to make 4, but it doesn't seem like the third wave is going to be the biggest in this, because it's actually the smallest. It's not even as big as wave 1. It's terrible. So maybe what we're doing is still wave 2, and it actually just isn't done chopping yet. That could be a good point. But after all, it's interested in hitting all these minor B points. After all, what audacity to break that small yellow line when it's just come off of such a big trend. Why would it be interested in that? Right? And it's like, well, strange enough, it actually is. Because I call it an audacity line because you would think that based off of the fact that it's broken the trend that's got it moving like this, right? Like that trend broke, and it has to break the downtrend in order to ever get back up and running again. And essentially, that's fine. But the major uptrend broke, and it created this trend. And it's not really fast fear we're seeing here, is it? Like the oh my goodness, the world is falling, sky is falling. Okay, no retest allowed. Immediate sell off and harsh, continuous movements. Every moment of the downtrend are just blasting. We don't have that. We have slow chop crap. You could say really, it's not very attractive for anybody. And if it is, I mean, you're a scalper, I suppose. If you found opportunity in that movement since we've been doing it, the ATR has kicked up a notch. Yeah, it's not that we didn't increase in ATR. We actually, for once, actually did better than we did in the morning. Like, where'd that come from, eh? When's the last time we had that? When does the end of day volatility match that of the morning ever? Now, that's an interesting fact that it has today. And the Audacity line's breaking because I'm like, okay, why is it an Audacity line? You would think, oh, with this big powerful uptrend, it just broke. Like that trend that had that much power has come to an end, and it's like, no, not really. I mean, it just like fuzzed out of the trend line. Like nobody was really even there. It was like nobody respected the break of the trend. Nobody wanted to fight against the trend. Interesting point. It could be the case. But is it not true that as crappy of a triangle this is, did it not try to come back to test it? And This one never did. I admire that. Like, wow, things can change very quickly. They can produce something so similar to what we had in the morning. And what did the one in the morning even do? One in the morning was part of a very strong sequence that I'm like, okay, are we part of that sequence again? Because the entire triangle in that morning area there, the open triangle, was part of our weird head and shoulders to inverse head and shoulders strange form. Oh, sorry, I didn't finish it. Strange format, which we saw before, like that. And I mean, like, in this sequence, that came out of the triangle somehow. Not doing it now, that's for sure. Maybe it's doing it upside down. That's another thing that we have to consider because it's not going to look like that. It's going to look different. It's really different. Kind of a mind bender. Draw it upside down. Sometimes it's a little harder to see. But it would be an inverse first and a head and shoulders second. And I don't quite see an inverse to a head and shoulders quite yet, that's for sure. But sometimes I like to keep that handy. Sure. Consideration. I'm like, all right, well, hold on a second. What did we do in the morning? Look, let's talk about our head and shoulders as well. Because is it not true that the head and shoulders of the morning was also part of the triangle? And then it was also true that the right shoulder sat strangely on top of the left. Like very weird, strange maneuver where the shoulder line was on an angle. Everything was on an angle. We haven't done that. But if we make a right shoulder above the left theory, this is where it would be. That's why I'm considering it. The trend can remain. What I like to do when I see fake break lines like that is a blue and yellow line because it likes to get tested from the other side. Like I can see right now that we've pretty much spiked out of the top as much as what we're trying to make out of the bottom right now, and it's insinuating that it wants to try and test it to make equality. Now, the funny thing about this is how you make a wave with a gap. Like you can go 1, 2, 3, 4, 5 out of this. Because what happens is there's actually a move. Oh, I didn't mean to move. There's actually a line here. And that's the line that I think it's trying to mingle with right now. Which it's a terrible movement, but for the sake of understanding it, it's good to know. Not to say I'm saying to take it or nothing. But if you did, protect yourself by all means. After all, the B points are getting hit right now in the major picture here too, so we can see we've tested the 161. It's not quite a 61 of the entire move, but do you remember in the morning we did a 61 to a 61 to a 61? And in this case, I don't think we're exactly going to do that, but the 61 is all the way down here. If we were to make a 61 to a 61, it would grab the B point associated with that movement right there. And remember, as we were approaching that level, I did mention that the low was actually at 41. And that is what it shows in line with the red zone. 261's been a very controversial level. We may see it and respond to it in the future. So it's not like it's done yet. Now another major thing that we have to consider, spike on the top, consolidation, and spike on the bottom. Now can we be doing that now? That's something that we, because if it's a fact that we have the same distance out of a consolidation and a spike on the bottom, I mean that is the move that we did to get going. It's not the move that we want to be worried about, but the understand was apparent at the inception of this, the beginning of the move. And I can't help but notice that
this consolidation here is again presented as a kind of like a notch into this area where we can see the red zone and green zones are. Now, I can't help but notice that it's like it's had a buying climax and an automatic rally. If it decides to break trend, it could be for a phase A. We're testing that preliminary support area right now. And the 61%, like I said, you want to keep some of the hedge for the 61% if you did, or I'll keep these on there. I just, for the sake of the picture, off the hook. Too confused by it. The beauty of hedging is in the event that it comes to the 61 and clears all the B points, you can profit off of all those levels and you can continue to hold from the most extreme spot. And in the event that that extreme spot is taken back, you can have part of your position from the high take over as a new 4. So ironically, it may have switched back and forth 2 or 3 times today already. Like in the end of the day, if you started your day hedging short and you got knocked out of your long from yesterday, name of the game this morning, we woke up was to hedge the move. That's all you could do. If you're long from yesterday, that's all you can do is hedge it. If you found a hedge for that move, unless you sold it, finding the hedge for it means that the hedge took over. And at the end of the day, if you were finding a hedge for that new short position, the low of the day, now you've increased the distance again. Now it has to move even farther to get you out. If you keep repeating the process, it has to make an incredible move that may not be applicable to any one day. Joe. This is an area that could prevent it from getting all the way to the point. We have to watch out for that because there's a giant gap here. And I'm like, well, what about testing the low of this crappy node rate? Trying to like get some action on that. Bit of a relief pop for the people of some intriguing. Just everything into the gap could be wicks and spikes back to. I'm going to extend this level too. Today and yesterday as a and the day before there as well level, and it's just a tiny consolidation that's held so much value in the future, drawn so particularly respond in a way. Now here we are getting a response to the low of the node. We can see exactly that is a wonderful place to consider taking some the hedge and during profit.
Now, the beautiful thing about it is when you're long from the low and you're thinking about dragging your stop up, you might get wiped out on a move like this, but if you're focusing on keeping your stop at the extreme, like I said, and trading against it, like I said, then you're good to go. And even if you're not very good at trading against it, it's like, where did you short it that is not at a profit now? And if you use less than half of your position, I mean, at the end of the day, I would suggest using tight stops rather than letting it rip. But you want to keep control over the hedges that are shorter term than the core always, Because many people, they will understand hedging as, oh, I go short against my long trade or something like that, and it's nothing to do with direction. It's all time frame. You got a long-term trade and a short-term trade. The hedge is always a short-term trade. Basically, it. That's the correct way to refer to it. And essentially, the hedge is always something that's trying to reduce risk of continuing to hold a long-term asset or instrument, whatever it is exposed to. Sometimes it's something you can't even sell, and you have to find a way to hedge it. I'm sure that's been the case many times. So is it not true that it's interested in testing the green dashed lines from the underside when it runs into a gap like this? We exerted plenty of energy to get to it. Now, the average pullback is more than necessary, or more than sufficient, should I say, to get all of these levels. And it's just what we do when we pull back. It's been how much we pull back when we pull back every time we pull back. Why don't we do that much? What could it mean to do more than that? Could it mean that we're on more than an average pullback? Maybe we're in a new trend. At the end of the day, that's something that's very, 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 very true. We do have to consider it like that, black and white, very, very clear. At the end of the day, more than our average pullback could mean more than our average pullback. So we have to understand that if it's getting used to making more than that confine, than that small little pullback that it's used to making, that's a big change. And if it has made more, then you can prove it. And that is powerful because it becomes a fact that it is comfortable making more than its average counter trend pullback. And what can that mean in terms of a 5-wave move? Like when we're like 1, 2, 3, 5. Our average counter trend move is very similar to what we're doing now. When it does more than that, it's almost certainly, you know, breaking the trend, right? How can it make more than that, really, without breaking the trend? Not unless it's exerted more energy to like continue going down, then it could make that move all day, no? It could do more than that move. Seen that before. Not to say it's going to do that, but it kind of already has, actually. In a strange way, I mean, where's the second wave and the fourth wave here? Are we talking about this 1, 2, 3, 5 that's elongated down? Are we talking about 1, 2, 3, 4, and 5? Or 1, 2, 5, 6, 7? Very strange, isn't it? Because at the moment that it was at this level, the expectation that I had for it was that it was just to come back to test the level, come back to test that level. And this level is something that I expect is going to be seen after we break the entire downtrend, which is ironic because most of this move will be bought back up again. And it puts the market in a very interesting position for the imbalance. Is it not true that we centralized for the imbalance? Like, where are we in the bigger picture here? Like, you know how we came down off of that 61, right? And then if we take a fib set all the way up to the top here, right? And we'll make it, normal. And we're exactly half of the move right now, 50%, exactly half. And the 61 of that entire of the uptrend and the B point. And at that point, it will be beautiful S wave. At the end of the day, does it have to get all the way there? What do we say about the gap? Could it be difficult about it? Oh yes, it could be. It doesn't have to get all the way there, but I would not drag your stop above that level if you are long. Now we can see we're slowly grinding, and that's fine. At the end of the day, we've got these little B points. It takes a lot of time to hit them sometimes. That's fine. 61 of the uptrend is protected by a gap, and I'm like, well, you know what's interesting about the move that we have now? is it's technically a fifth wave, but it's not in the same way. Like this move here. Hold on a second. If we got that move there, what would that look like? Because it's not like we don't do that sometimes. You know, sometimes it does this. Because you know how close it is to doing that? Like, is it allowed to do it this way? Of course it is. You know what I mean? It's very similar, incredibly similar. So beware of that. Because you know, it's 5 as well. It's like 1, 2, 3, 5. It's just got a little bit of difference to it, of extra waviness, and that's fine. Absolutely fine. You can see it got to that level. Absolutely gonna get through it most likely, but of course the short-term trade is to make it safe by this point. In the event that you took the exposure back up to this level, you want to make sure that it's safe by this point. It's not playing fair, to say the least. Not with this trend. And if it wants to test it again, any stops that are above it are going to get wiped out as well. And I mean, like, what's the best place to have the worst trend break? The worst trend breaks come out of the VWAP. And because they reduce volatility, and I mean, I'm rooting for it, but this is the imbalance as well. So it was on the imbalance that it reversed, and it wasn't the 61; it was the 50. The 50 was sitting on top of a gap, so there was a confluence. There was a need to get back to the short-term VWAP, or sorry, short-term B points, and I think yeah, they were in line with the VWAP, which is likely to get tested again from the upper side too. Like what we're doing right now. Everything's about that line right now. It's a terrible line, that white one. And it's part of our sequence in the Wyckoff too, potentially. And I'm like, well, you know, can we try and squeeze in phase A by the end of the day? Let's take a look at it. You know, from what I can see, you know, we've done this kind of N. Or we're here. We're at the automatic rally baseline. So that's a really intriguing kind of like move. It could end up going down to here and then up to here overnight, and then creating some terribly long consolidation. An excuse for it to go sideways ultimately for a little bit. But you know, just like the other Wyckoff that there was on this chart, I think that they're going to put one up here and it's going to fail upwards. Like this one failed downwards. Okay. So let's say, for instance, it makes a consolidation here. Could this be the spike on the bottom? You know, could this be the entire spike on the bottom? And we make a big consolidation overnight and then make a spike on the top tomorrow? Where the end of the day ends up right back where it starts, yet everybody from today is safe? They have to have the integrity to hold against a move like this, though. The people from the beginning of tomorrow's run are likely to be wiped out before it actually. That's going to be a blow to a lot of their ability to continue chasing. At least I think this is the plan because it's a good one. Because what do you think they're done work though? These people? No, they're definitely making moves. And overnight session's going to be an interesting one tonight. You know that they're going to be watching with a position like that, eh? Of course they will be. You'd be crazy not to. Somebody's going to be watching. And they might be tasked with, hey, keep it inside of the range till the morning, which is fine. That's Wyckoff. Like I said, the break of the downtrend could involve getting us to the key point that's above. And I mean, I haven't marked them all. You know, you've got one that was just hit there. You've got one just hit, well, not hit there, but this one here's still not really. And they're all like riddled all the way down with terrible B points. Like I was saying about this one. Atrocious how many B points that it left along the way. Never,
was that in our recent ranges. How much time we spent in these areas? Ridiculous. At the end of the day, getting short, I think. Where's 61 of this dump? Question. Couple minutes till the close. Up at that node right there. I'll tell you one thing. Certainly done more than the average counter trend pullback in this one. But is it not interesting how we break low and then come back just to the spot that it affected most people negatively? On a fifth wave or something like that. And everything was bought back up. It's like a liquidity grab. Of course, the people from the low that kept it and hedged against are in the best position to possibly be. And there's the end of the day move right up to the 61. Yeah, no, that's the end of the day there. We look like we've had a pretty much 61 retracement of that entire last move there. It's not quite all the way there though, but did a good shot at trying to come back to that level. We'll monitor it throughout the night, and it could be easily making that Wyckoff we were talking about in not too far back. But hopefully you guys have a wonderful day, and I'll catch you guys later. Take it easy.
Thanks, John.
Anytime. Have a good one.
Bye.